This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance. Interesting Friday, reading into the May 1 Fed meeting. Pushed aside 2 a.m. this morning. Another contact of Israel and Iran. And I'm seeing the word drone, Paul.
Yep.
I noticed AP just putting it in the subhead moments ago. A drone attack, perhaps that's how we should frame it.
It seems like that's kind of the new type of warfare here, and certainly in certain scale here, using drones as opposed to putting, armed aircraft in the way or missiles here. So again, we'll keep monitoring that situation, but a little bit of an escalation there, retaliation. A
movable story. Here's what we're going to do. We had Chris Morangi scheduled to Gabelli, an important conversation on value, and particularly with the media frenzy out in Hollywood. Instead, we went to the Hollywood starlet. Roz Matheson's going to join us here in a moment, driving all of our economic and government coverage. She is attuned to the threads of information that we have from Tel Aviv, Far East to Isfahan, and then north to Tehran as well. We'll get to Roz Matheson in a moment. Also joining the show exclusively today,
really,
Antony Blinken, the Secretary of State. Wow. He's at Capri at the G7 meetings, and we were going to listen to Mr. Blinken speak on Israel and Iran here. We're waiting for that in moments. We see the lectern with the two American flags. Right now, let's get to it. A Bloomberg Business Flash, Lisa Mateo.
You got it. Good morning. Futures are falling, and this is on Mideast tension. Right now, we have NASDAQ futures down 0.5%, S&P futures down 0.3%, Dow futures down 0.1%. I want to jump to commodities next because that tension also affecting oil prices. Oil jumped actually to $90 a barrel after Israel launched that retaliatory strike on Iran, but it's now slowed down. We have Brent crude at $86 a barrel, NYMEX crude at $82 a barrel. I want to point out gold is lower at $2,394 an ounce. Over to earnings. Procter & Gamble's out down about 0.1%. Maker of Pampers, they boosted its profit outlook, and so you can see that right there. And then we have American Express. They're just coming out. They're up about 1% right now. Reported revenue topped estimates in the first 3 months of the year. And I want to get back to Netflix. We talked about them yesterday. Their shares lower, down 6%. Subscriber growth, that surpassed estimates, but the company says those gains will be lower this period. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. From the Interactive Brokers studio, we're waiting for Secretary Blinken and his comments on these events in the Eastern Mediterranean. Since 2 a.m. this morning, U.S. time, she has been bringing together the threads of information that we have. Rosalind Matheson joins us right now. Roz, I guess it's a cliche, but it's also true. What is the latest?
Well, the latest is that we know that there was these explosions in western and central Iran in the early hours of the morning in an area of Iran that's quite important in terms of air bases, but also Iran's nuclear architecture. We know that the sites were not hit, but we do know that it seems to have been a strike on an air base in the area. Iran is really playing this down. They're saying that this was a drone strike by Israel. They say it was unsuccessful. The reports from Israel are that there were missiles involved, but either way, it seems to have been a fairly calibrated action by Israel in the wee hours of this morning.
Roz, I know you're crushingly busy right now. I'm going to keep this as focused as I can. With all of your experience, the hours at Davos, the hours at G7 meetings, what is the distinction here that these events occur with a G7 meeting with the Secretary of State to speak in moments?
We're expecting, as you say, Antony Blinken to speak in just a minute. But what it really is about is Israel and Iran working out a way to maintain their postures, to do what they feel they need to do without tipping this into a broader regional conflict or something that escalates and pulls in the US. And that, of course, is what Antony Blinken is highly concerned about. So what we're seeing is tit-for-tat maneuvers, but keeping it relatively restrained, and for Israel, primarily concentrating on wanting to get back to its war in Gaza. That's the thing that Israel really feels existentially is important to its heart. And so you can see the US, Europe, the UK, and others have been urging restraint. Israel felt it had to do something against Iran. It's taken that action. The question now is, are we really done by either side?
That's kind of where I want to go, Roz. I mean, I think when you look at both sides here over the past several days, it seems like both sides, Israel in its response, Iran in its initial attack, restraint seems to be the word. Proportionality seems to be the word. It doesn't seem like either side wants to escalate this. Where do we go from here?
Well, that's right. I mean, it's also very risky. I mean, you're playing this game in a way with each other of calibration. I'm going to do this. You won't do that. You won't go further than me. And it's all very, very delicate and dangerous. But what it does show, again, is neither of them want this to tip into a broader conflict. It wouldn't suit Iran. It wouldn't suit Israel. It certainly wouldn't suit the US, because you're talking about possible major disruption to oil supply, to prices, to inflation, to the global economy, massive knock-on effect. And Israel really does want to focus on its conflict in Gaza against Hamas. It wants to focus on eradicating Hamas. That's its goal. And so it doesn't want these distractions. So really you can see the mutual interest. But again, it's a dangerous game of cat and mouse.
To all of you across the nation and worldwide, Rosalind Matheson with us, driving all of our government coverage here as we await comments from the Secretary of State of the United States. Just because of time, Roz, I'm going to squeeze this in. I know you've got to get to the press conference. Airspace. We are flying, Israel is flying over Iraq and, far more interestingly, Jordanian airspace to get directly east, far east to Isfahan. How do the Jordanians respond to these events of the morning?
Well, it's really putting Jordan in a very, very delicate position, because we do know that Jordan actually helped shoot down some of the projectiles that Iran fired almost a week ago for the first time from Iranian soil at Israel. Jordan helped intercept alongside the US, UK, and others. And Jordan has been an ally of the US, but it's also got one foot in the camp in the region. So it needs to be very careful to not be overtly seen to be supporting Israel. It is cautious about the use of its airspace. It's cautious about being caught in the middle, but it does say for its own safety and its own security of airspace, it does need to act when these things fly through the air above Jordan itself.
Roz, thank you so much. We'll let you get to preparation for the Blinken press conference. Rosalind Matheson driving all of our government coverage worldwide. Terrific brief there. Good morning on Apple CarPlay and on YouTube. Of course, YouTube out, search Bloomberg Podcasts. Growing every day with a wonderful, really informative live chat. I'm learning a lot there as well, to say the least. We have a roughly 2-minute, whatever that means, warning in the world of diplomacy for comments by the Secretary of State. We're waiting for that right now. Paul, to me, the distinguishing feature here is nobody wants to do anything, but they're doing something.
They're doing something, but again, it just seems like both sides very restrained, tit for tat a little bit. There's I sense a proportionality. We want to respond, but not too egregious. We don't want to expand this issue any further. So, but again, there is movement there. So we'll see.
Well, we'll see. In Capri, on the island of Capri in Italy, a previously scheduled G7 meeting, the Secretary of State is going to begin speaking. We'll go to him when he addresses Israel and Iran. We're not sure what the opening comments will be here, if they're of G7 minutia or, the meeting and all that, or is he going to get right to the events that we've seen since 2 o'clock? If you're just waking up across the nation, a new event of this argument, this conflict between Israel and Iran this morning, a form of attack, perhaps is reported by drones by Israel directly east to Isfahan, which is south of Tehran. The note there, besides the culture, the history of Isfahan, a beautiful city, is also somewhat involved in their nuclear generation. Again, the reports initially by the United States and others was that there was no nuclear events involved here overnight. This was much more conventional. And then, as Roz Matheson said, there's a real mystery here about what's going on.
And Tom, just looking at the energy markets, just to give you a sense, Brent crude down about 0.1%, 0.9%, $86. So the energy markets are kind of signaling that some of the restraint that we've seen over the past 12 to 24 hours.
Now, it's going to be interesting to see. Right now, we go to the Secretary of State, Antony Blinken, all of his heritage and his family of Israel, his comments from Capri, Italy.
Unprecedented Iranian attack on Israel. Unprecedented in scope and scale. Scope because it was a direct attack on Israel from Iran. Scale because it involved more than 300 munitions, including ballistic missiles. We're committed to Israel's security. We're also committed to de-escalating, to trying to bring this tension to a close. You saw as well, or you'll see soon in the G7 statement, a commitment to hold Iran to account for its destabilizing activities, holding it to account by degrading its missile and drone capabilities. And yesterday, the United States announced additional sanctions on Iran, targeting UAV programs, the steel industry, companies that are associated with the IRGC, the Ministry of Defense, and its armed forces logistics. The G7 statement makes clear that G7 countries will adopt additional sanctions or other measures in the days ahead. Even as we've been dealing with the conflict in the Middle East and, again, the unprecedented attack by Iran on Israel, we've remained intensely focused on Gaza. We urge the rapid implementation of Israel's humanitarian assistance commitments. More aid, more crossings, better deconfliction, better distribution of the assistance to all who need it. We have seen important steps over the last couple of weeks, with more crossings opening, more aid getting in, more aid getting around. But we need to see sustained results. And we need, in particular, to make sure that there is distribution throughout Gaza. We also focused on the imperative of getting to a ceasefire with the release of hostages. Such a ceasefire would facilitate the dramatic expansion in humanitarian assistance. It would also let Gazans return to the north, those who've been displaced from the north. The only thing standing between the Gazan people and a ceasefire is Hamas. It's rejected generous proposals from Israel. It seems more interested in a regional conflict than it is in a ceasefire that would immediately improve the lives of the Palestinian people. It continues to move the goalposts, and the world needs to know and needs to understand, again, that the only thing standing between a ceasefire and the Gazan people is Hamas. The G7 is also very clear in its unwavering support for Ukraine, faced with aggression from Russia. Putin thinks that he can outweigh Ukraine and outweigh Ukraine's supporters. The message coming out of Capri is he can't. Every G7 member is making extraordinary contributions to Ukraine's defense. And as I've said before, this is the best burden sharing that I've ever seen across the Atlantic in more than 30 years of being engaged in these issues, with Europe as well as Asian partners picking up more than their share of the load. I want to particularly recognize Prime Minister Meloni for her leadership, her decisive leadership. We can see two things right now. Together, we are helping to put Ukraine on a long-term path where it will stand strongly on its own 2 feet, militarily, economically, democratically. More than now 30 countries are engaged in negotiating, and some have concluded negotiations with Ukraine on security pacts. And together with what I'm convinced will emerge from the NATO summit, you can see Ukraine effectively building a force for the future, one that can deter aggression and defeat it as necessary. We're working to drive private sector investment into Ukraine and also help it develop its own defense industrial base in ways that will provide for a strong, enduring economy. And of course, now that the accession path to the EU is open, that will help Ukraine deep-root its democracy. But even as we're doing all of that, we heard clearly from Foreign Minister Kuleba that it's imperative that in this moment, Ukraine get more resources that it needs to deal with the ongoing Russian aggression. It needs more air defenses. It needs more munitions. It needs more artillery. Allies and partners, including the G7 countries, are committed to delivering on that. We discussed steps to provide more assistance, more immediately to Ukraine. We also discussed ways to protect and help restore its energy grid, which Russia has sought to decimate. And here again, I think we can see important steps that were already taken, but more to come in making sure that Ukraine has sustainable energy for its people. We're also working to strengthen efforts to disrupt the transfer of weapons and also inputs for Russia's defense industrial base. When it comes to weapons, what we've seen, of course, is North Korea and Iran primarily providing things to Russia. But when it comes to Russia's defense industrial base, the primary contributor in this moment to that is China. We see China sharing machine tools, semiconductors, other dual-use items that have helped Russia rebuild the defense industrial base that sanctions and export controls had done so much to degrade. Now, if China purports, on the one hand, to want good relations with Europe and other countries, it can't, on the other hand, be fueling what is the biggest threat to European security since the end of the Cold War. And you don't have to just take that from me. This is what I heard around the table at the G7. Progress on solutions also to use Russia's sovereign assets for Ukraine was on the agenda. And here, I think we're working on getting to an agreement on that, consistent with international law, consistent with different countries' laws. The Kremlin has called this theft. The real theft is in Ukrainians' lives taken, in so much of Ukraine's infrastructure destroyed, in so much of its land seized.
That is the Secretary of State of the United States. We are going to leave this continuing press conference. We'll, of course, monitor the headlines across the Bloomberg professional service with Roz Matheson, who we spoke to earlier. We've got a team in Capri, and, of course, Ethan Bronner leading our coverage in Tel Aviv. So I think we'll have a good set of headlines to keep you informed on this. The diplomat Paul Sweeney informed you that oil had dropped. You know, you wake up, you see this kind of news, and I'm thinking 90, 92, 93 on Brent crude, and instead I have $86.28.
Yeah, Tom, the
so
Brent
quiescent.
Exactly. Brent crude had hit $90 earlier today, probably certainly on that news, but we've pulled back here a little bit since, given the relative restraint shown.
Right now, and this is really timely, I want to paint a picture of this for you. Chris Marangi is joining us from Gabelli, and yes, it's on everything, including their majority ownership of the Atlanta Braves. But far more importantly is the heritage of Gabelli. And no one knows this better than Paul Sweeney, which is long ago and far away. There were analysts and people in banking like Paul Sweeney or Jessica Reeve Cohen, and you had to go out to Los Angeles and sit in front of Gordon Crawford or go to New York and sit in front of Mario Gabelli and talk media stocks. It's a mess, Paul. Why didn't you bring in Chris Marangi?
It is a mess. Chris Marangi joins us. He's a co-CIO of Gabelli Funds. Hey, Chris, thanks so much for joining us here. You know, we're got a little bit of a pullback here in the marketplace. Let's call it 5% on the S&P. What do you make of this? Is this kind of just a healthy pause in what's really been a strong market since October?
Yeah, I think that's right. You know, we're digesting what's been a very healthy market, healthy earnings, and it's hopefully the pause that refreshes. Obviously, we look to the fall, we look to the elections here, ongoing geopolitical issues, which weigh on animal spirits. But ultimately, we think we get through that, and Powell at some point will cut. The Fed put is in play.
All right, so Chris, we're getting into earning season here in earnest here. What are you looking for here? Do earnings need to really surprise on the upside to continue to support this market? Because I don't think the Fed's going to be there for me anytime soon.
Yeah, obviously the rally that we had late last year was supported almost entirely by multiple expansion as hopes for rate cuts increased, and that certainly has been pushed off. So yeah, in some ways, we need to grow into the multiples that we are seeing today. They're not extreme by any stretch. We are seeing bargains in certain areas of the market. But yeah, I think the market's going to be looking for continued stability and economic growth, not too hot, not too cold.
Right.
Really, the Goldilocks scenario that we all hope for.
Chris, I got to be honest. I learned so much from the giant Mario Gabelli about Class A and Class B shares. Here's a summary, folks. The only Class A, Class B structure where I haven't been run over was General Cinema, the wonderful family up in Boston in General Cinema. Chris Marangi, Class B, what is Paramount doing with a Class A, Class B structure right now besides running over people like Chris Marangi and Mario Gabelli?
Well, it's pretty clear what Sherry is doing. Sherry Redstone, of course, controlling shareholder of National Amusements, which owns control of Paramount via her A shares, and that she's got a debt problem at National Amusements, and she's making that a Paramount problem. Paramount obviously has its challenges, like all traditional media companies, but they've got a plan to get through them, and so she's looking to sell her stake, which she can do. The problem comes in what's the purported second step of this transaction with Skydance, which is how does Skydance merge their business into Paramount in a way that benefits all shareholders? And that's the sticky part. That's the part that's potentially subject to litigation. And of course, we've got news today that Apollo may be strengthening its bid with a partnership with Sony, which makes a lot of sense. Sony has looked at this business in years past, and merging studios is quite synergistic.
I mean, I have to ask this because we're in the news business, and for all of our people on YouTube, it's a live chat, Chris, but they're all, they're going to protect your knowledge. What's the share valuation of Paramount where Gabelli is comfortable? What's the price point where you say, okay, we're not getting run over?
Well, listen, I'm not going to bid against myself. We think Paramount is worth $30 a share. It could be as much as $30 a share. And the A shares, which our clients own a majority of the minority, about half of those, are probably worth a premium. That's been the historic precedent, and don't think that applies here.
So, Chris, let's just step back a little bit on the media space here. I mean, we saw Netflix last night with some substantial beats on the subscriber front there. It seems like they figured out the streaming business. Is there a reason to believe that the others, whether it be Paramount, whether it be Warner Brothers Discovery, even Disney, that they will figure it out and generate similar profits to Netflix? How do you guys think about that?
Yeah, certainly that's the hope. Netflix is the unequivocal winner in streaming. They had a fabulous quarter. It's a fabulous company. The stock is off, for good old profit taking. But we think over time that they'll do well. But there'll be others who can take a share of this market. It looks like Disney has a seat at the table, and there's probably at least a couple of other seats. But it likely takes more consolidation and confederation amongst the other streaming services to get a real scaled service that can be compelling for customers and economically viable.
All right, Chris, let's step back a little bit from the media space. Where else do you guys at Gabelli see opportunity here? Because, so many folks kind of come into our studio and say, continue to buy these big tech names, whether it's NVIDIA or, some of the others. Where do you guys see opportunities out there?
Yeah, and by the way, it's hard to ignore some of these big tech names.
Yep.
Fortress balance sheets, great businesses, trading at reasonable valuations. We do own some Meta and Google in places. They are in many ways media companies. They eat via advertising. But beyond that, we're looking at a range of companies in industries where companies can create a sustainable competitive advantage. And some of those subsectors would be the waste disposal companies, which are inflation indexed. Certain areas of consumer staples, which have been beat up, as well as actually utilities. Actually, an area we've known quite well for a long period of time. The multiples have been cut in half because of the rise in rates, but they actually have some secular tailwinds here with further investment in electrification to support AI and the EV car park.
We have to leave it there. Chris Marangi, thank you so much. Sorry for the breaking news and all that, which cuts short our good time with you. Mr. Marangi is with Gabelli this morning. The Secretary of State still speaking at Capri, Italy, taking questions, it appears. Mr. Blinken says China is main contributor to Russia defense industry. And of course, Paul, the overlay of his comments on Ukraine was a stunning event yesterday. My Wendy Schiller, I went to go to my Wendy Schiller and study page 345. But the bottom line is, in the Rules Committee, to the memory of Louise Slaughter, I should say, in the Rules Committee, you always vote by party line. They didn't yesterday. And after Republicans walked away from their speaker, Democrats came over to move the next step out of Rules Committee towards what Speaker Johnson hopes is a Saturday evening vote.
Right, so they will be working over the weekend, Tom, and presumably getting votes on some of these big packages for Ukraine, for Israel, and for Asia in terms of funding there. So Mr. Johnson perhaps putting himself in jeopardy here to move this forward.
Yeah, and we'll just have to see more on this. Again, the Secretary of State still speaking at the G7 foreign ministers meeting in Capri, Italy. I spoke to John Ferro this morning. He says the hotel they're in is lovely since he's been there.
Oh, of course, I'm sure he has. Of course he has.
14
Capri, I was just looking at the
times.
map. Looks very nice.
It's very nice.
I think
John
we may need
has
to do
he's
a
got the wooden
surveillance.
boat. He borrows it
He
from
does?
George.
Okay.
And, you know, you get Capri's around.
Goes back and forth to Naples.
It's tough
Okay.
life. Futures negative 12. Brent crude with these events well under $90 a barrel. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Markets remain on edge after tension in the Middle East starts to escalate. We have NASDAQ futures down 0.3%, S&P futures 0.2%, Dow futures down 0.1%. Over to the bond market, the 2-year yield at 4.96%. That's down about 1 basis point. The 10-year yield at 4.59%, and that's down about 3 basis points. What's also not helping the markets aside from the Middle East tension, the debate over interest rates. New York Fed President John Williams said even a rate hike is possible. And then we have the Fed's Raphael Bostic saying he doesn't think that it will be appropriate to ease until toward the end of 2024. And finally, Neil Kashkari told the Fox News channel that the Fed could potentially hold rates steady all year. A lot of tech news this morning. Let's get right to it. Apple, little changed. It pulled its WhatsApp and Threads from its China App Store, and this is after a government order. And then Meta's down 0.5%. Mark Zuckerberg said the company will introduce Meta AI across its social media apps. And finally, Alphabet's Google down 1%. CEO said it's consolidating its workplace team structure all under Google DeepMind. He said that's going to help speed up the development of AI products and services. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate that, Lisa, right now. I've just been looking here. This is the feed from Bloomberg. Let me see. There it is. Carla Carnavetti, our senior editor on this. And there's a couple important points here as we look at the news. The secretary is still speaking in Capri. Some of the headlines are on China. It's an eclectic conversation by Secretary of State Blinken. Here's the key item, Paul, that I think is not in the zeitgeist right now. And let me quote it in full from Bloomberg News. Separately, the Syrian state-run Sana news agency said Israel also struck Syria's aerial defense positions. Israel has not confirmed that.
Okay.
That's not out there. That's one idea from Syria. Take that as you can. But I think one of the key things here was this multidimensional. We don't know that yet.
Yeah.
I don't want to speculate on that. But that's Carla Carnavetti at Bloomberg News. Right now, we're going to stay on plan here. Brent crude down 82 cents, $86.29. Futures improve to a -8. The VIX out over 19 is 18.82. Good morning on YouTube. And search there for Bloomberg Podcast. Really pleased you're with us this morning. Nate Thuft has the worst job this weekend of anybody I know. Nate, I think it's price down, yield up. What's the to-do list for Manulife? If I get price down, yield up, what do I do right now?
Yeah, you're absolutely right. It's a challenge because, as you know, that correlation doesn't usually work that way. And right now, when it comes to building diversified asset allocation portfolios, you can't really rely on your equity or your fixed income to provide your upside when you have these types of uncertain environments. And we are in a transitional period. We don't think that that correlation dynamic will persist indefinitely. Certainly it did in 2022. In 2023, we got some benefits. We got upside in equities. We actually had some decent performance in parts of the fixed income market. So it's not a persistent theme, but when it happens, it does create challenges. But there's opportunities within those challenges. And so areas like select parts of the equity market have been doing better. Energy sector, as an example, is an area that we think is a structural theme that could carry on for a period of time. We still like Japanese equities. There's a number of things driving Japanese equities. Even though they come off highs recently, we still think it's an opportunistic play. So there's areas to focus on, even with that challenging correlation dynamic.
It's usual, you know, I was doing this at 2 a.m. this morning, Paul, and somebody had out a great Bloomberg yield to worst chart, and I'm going to steal it right now, but I can't thank whoever I stole it from. Paul, my long-term moving average on yield off the Bloomberg Global Yield to Worst Index at 4.00% yesterday. My moving average there, are you ready?
Go.
2011.
Really?
That's where the global yield structure is right now. I don't think people into the weekend realize that.
I don't think they do. So, all right, Neil, let's follow up on that. Where do we go in the fixed income space here? I mean, we can park Tom in a 2-year treasury at 4.97%. Is that the trade here, or do we take on some credit risk?
I think there's some opportunity beyond that. I mean, when you look at the credit portion of the market, it's held up really well. Credit spreads have been extraordinarily well behaved, almost too well behaved given the uncertainty. But within credit, higher quality credit, even parts of the bank loan market we think is fairly interesting because you don't get that same level of interest rate sensitivity, but the credit quality, if you're selective, is still pretty good. And then outside the United States, dollar-based emerging market debt offers a pretty attractive absolute yield. And generally speaking, there's some economies outside the US that actually have better debt profiles than much of the developed world. So we do think there's selective opportunities in the credit space beyond just owning cash or short-term treasury instruments.
Now, you mentioned Japan, and I think Tom Keene and maybe John Tucker and I, we're the only ones old enough to remember when Japan was the bomb here. We went 25, 30 years where there's just no growth, no opportunities there. Why is Japan an opportunity these days?
It's about time, right? It has been that long. And it's been a theme over the last basically 18 to 24 months now, where Japan is actually a beneficiary of some of the deglobalization and desynchronization trends that are out there. It actually has real growth opportunities now. You're seeing things like semiconductor companies build plants in Japan to broaden the supply chain, the way you can source these types of chips. So Japan is actually in Asia a bit more aligned with the Western world. So it's benefiting from some of the realignment around deglobalization and desynchronization. But further, the level of share quality from the perspective of how the ownership structures and the board structures of these companies are working in Japan are much more business-centric or friendly than the past. And you're finally starting to see people re-rate that, even though that trend's been in place now for half a decade. People are starting to appreciate it more.
Nathan, I'm working on my chart of the year, which is this yield to worst idea. We're back out to 4%. If I take this puppy back 30 years, 3 decades, and I run it semi-log, and I run a regression analysis of the great continuous, John Taylor's great moderation, Paul Volcker's miracle of lower and lower interest rates, I'm now out 4 standard deviations of a move from where we were with negative rates out to 4% yield to worst yield globally. Don't you have to mean revert that puppy and be loading the boat this morning like Ian Lingen over at BMO Capital?
I do think you have to be adding and dollar cost averaging into it. My worry is it might, even though we're at that level of standard deviation from the historical range, it does still require a bit of patience in our view of deploying your assets. So I agree. If you have a 5-year to 10-year outlook, the opportunity set in traditional fixed income is a heck of a lot better than it was 3 years ago or 5 years ago. But I do think it requires a little bit of thought of how you deploy that asset. We always say that cash is not a bad instrument. It's a great parking lot. Use that parking lot to gradually deploy as yields keep going up.
Hugely valuable. Thanks so much. Nate Thue, great debate. Global multi-asset CIO at Manulife. He has to put up with Francis Donald. I mean, think about that.
Yeah.
He ages doing that. Paul, let me explain this again. Yield to worst. I take global bonds. It's a great, great broad Bloomberg index. Thank you, Lehman Brothers, for this. You got the great disinflationary trend from 4% down to 1%. And then abruptly reverses, which we're all living in housing. Okay. Are you looking house looking this weekend?
No. I've got
nobody is.
Exactly.
Nobody is.
I've got the estate.
Okay, all you need to know, folks, is 2 standard deviations is normal. 3 standard deviations, we get a little sweaty. You know, it's a little worry. You never see 4 standard deviations on a long-term chart like that.
No.
That's a
Here we go.
societal shock that we're seeing right now with these yields.
I know. We got the 10-year Treasury here, 4.59%. And again, Tom, we can park you in a 2-year Treasury, get you darn near 5%. How about that?
Yeah, but I can't take triple leverage out on a 2-year. I got to stay closer. You know, it's a little too much risk.
I know people that, serious professional investors with their personal account are just rolling T-bills.
Oh, yeah.
I mean, that's what they've been doing for 2 years now.
I got lectured on that at the dining room table as a kid. I mean, that's what Mrs. Keene did. Futures -8, down futures -47. The VIX was 19. We come a little bit. If you're just joining us, if you're just waking up across the nation, on Apple CarPlay, on YouTube, All I can say is there are movable events in the greater Middle East of Israel and Iran. Secretary Blinken has ended his comments in Capri at the G7 meetings. With our news in New York City, John Tucker.
All right, Tom. Yeah, Israel did launch a retaliatory strike on Iran today. It comes less than a week after Tehran's rocket and drone barrage. The targets were military bases near Isfahan, home to nuclear facilities and factories associated with Iranian drone and missile production. And Secretary of State Antony Blinken at the G7 summit in Capri this morning had this to say after the strike.
We're committed to Israel's security. We're also committed to de-escalating, to trying to bring this tension to a close.
Iranian state media downplaying the attack. In other news, a jury has been seated in Manhattan in the criminal case against Donald Trump. That story this morning from Bloomberg's June Grasso.
12 jurors and one alternate juror have been sworn in Trump's hush money trial. The jury of Manhattanites includes a sales professional, a software engineer, a security engineer, a teacher, a speech therapist, an investment banker, a retired wealth manager, and several lawyers. The trial judge says he hopes to have jury selection wrapped up today and opening statements on Monday. In New York, June Grasso, Bloomberg Radio.
The Biden administration this morning finalizing a plan to prevent oil development across more than half of the U.S. government's mammoth petroleum reserve in Alaska. They also set the stage to block road construction essential to opening a copper mine in the state. The move comes as the president tries to gain support from young, climate-minded voters. And San Francisco, the latest U.S. city preparing to receive a pair of pandas from China. It's a continuation of Beijing's famed panda diplomacy. San Francisco's Mayor London Breed announcing the panda loan in Beijing today. China, of course, home to the only natural habitat for pandas and owns most of the black and white bears in the world. I guess Panda Cam is coming back as well.
Oh, is it? Oh,
one would hope.
Yeah.
Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, and Lisa.
Thank you. Over the weekend, great to talk to Chris Marenghi. Too short a conversation. Paul, I am absolutely baffled by the Class A, Class B structure of media titans over the response or respect, I should say, to shareholders. This Paramount deal, it gets more and more bizarre, I guess.
It does. And dual class shares for media companies really started with the newspapers 100+ years ago.
Yeah.
And the original logic was to ensure editorial independence, that the family that owned XYZ newspaper in whatever town would not be influenced by shareholders, would be able to maintain its editorial independence. You take that flash forward to radio companies, to TV companies, to cable television companies, to cellular telephone companies, all the way through to the big entertainment companies, and that kind of status has basically stayed. And investors, basically, if you're a media investor, you just have to get used to it, and you get it. And by and large, you could figure out who the good families were and maybe who some of those were not. The Redstone family, Sumner Redstone, the original media mogul, one could argue, always acted in I think, in interest of his shareholders. And we'll have to see if that happens here, Tom.
A great study. I haven't done this yet, Paul. Let's talk about it. I just did the yield to worst chart, which frankly right now would be my chart of the year.
Ooh.
But the 30-year mortgage, 7.40% off bank rate, looks a lot the same. But the real mortgage rate, if you take your mortgage rate and subtract inflation, the inflation of 2000, 2001 was not like now, I'm guessing.
Yeah.
And I wonder what the real mortgage rate is right now. Versus,
exactly.
where it was.
And I'm just, I look at the MBA 30-year fixed 7.13% here. I mean, that is amazing, and it really goes to the affordability, or the lack of home affordability in this country right now. Is almost as difficult as it's ever been.
We're going to have to see. Apple CarPlay is where you find us. Also out in Google, of course. Download the Bloomberg Business app. On YouTube, live chat. Search Bloomberg Podcasts. Good morning.
Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Geopolitical tensions may have already set the stage for stocks to open lower this morning. Right now, NASDAQ futures down 0.3%. Dow and S&P futures down about 0.1%. Want to head over to commodities. We have Brent crude, $86 a barrel. That's down from the 90 from earlier today. NYMEX crude at $82 a barrel. Over to yields, the 2-year yield at 4.97%, down a basis point. The 10-year yield at 4.59%, down 3 basis points. To earnings, we'll start with L'Oreal, up 4% in Paris, reported better than expected first quarter sales. Then we have news from Nordstrom. They're down 1%. It formed a special committee to evaluate a founding family proposal to go private, to take the company private. And finally, shares of Netflix, they are lower. You're down more than 6%. Subscriber growth surpassed estimates, but the company says those gains will be lower this period. That is your Bloomberg Business Flash. Tom and Paul.
Joining us right now, you've seen him in the movie Three Body Problem on Netflix. Alec Webb joins us right now. Come on, Alec. I'm addicted to Three Body Problem. My guy watched it. I'm like, yeah, it's for the kids, the hipsters like Alex Webb. And then I'm just like completely addicted to this thing. Alex, how does Netflix do this? Let's make a movie about a girl and her mother dies in a car accident and she sees chess pieces on the ceiling. Let's make a movie about a Chinese girl on a mountaintop in China that talks to people 4 light years away, and it's like interesting. Alex, what's going on at Netflix?
Well, there are 2 ways to think about this. First, of course, is that this is the whole business model of Netflix. You do not need to get an audience of 10 million people in one country. You get an audience of 500,000 people in 20 countries. And so you're targeting a very thin slice of audience in 220 markets, I think they're present in. So that's how you manage to make shows like that a hit more easily than you might if you were, as you were talking about earlier, say Paramount, right? The other part of it, though, of course, is that they are now in a position with cash generation where they can actually still take bigger risks than some of their competitors can, right? They are profitable where every other streamer in the US pretty much is unprofitable. So that gives them a little bit more leeway to take risks that it could be tricky for others to justify.
Hey, Alex, Netflix in the most recent quarter added 9.3 million customers, almost twice what the street was looking for. Where did they all come from?
Well, again, it's sort of 2 pieces, really. Firstly, content, of course. Things like the Three Body Problem, have managed to attract new subscribers. But then there is also the kind of, pure corporate strategy, which is cracking down on the password sharing, right? By cracking down on password sharing, where, I'm sure people out there might have done this, where they let their parents or their friends or their ex-partners or something use their Netflix passwords. By tracking IP addresses, they've made that a lot harder. That has forced more people to sign up. Right. Around the edges, of course, there's also then the advertising supported tier, which is a bit cheaper.
Alex, one more question. We got to run off to our newspapers. Lisa's chomping at the bit. Alex Webb, layoffs, restructuring in Netflix, they're going to be more customer-centric. Translate.
Well, look, we've seen a number of different things in Netflix, the job cuts, the, of course, decision not to reveal the numbers, the number of, on a quarterly basis, the number of subscribers they have. This is all about this pivot away from a focus on growth. They want the investors to focus on their ability to generate value. Like when you're a growth stock, you could say, we're adding subscribers. Don't worry so much about the numbers. Now, the numbers are kind of quite good. So they say, don't worry about the growth, look at the numbers. So all of this, unfortunately for the employees who may well be losing their jobs, is about that pivot.
Alex Webb, thank you so much. Greatly appreciate it. Look forward to seeing you in season 2, Three Body Problem.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages on a Friday, brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. And on a Friday, Michael Barr, Lisa Mateo, Paul Sweeney, and I say thank you, Interactive Brokers. Lisa, what do you got?
All right, we're talking about why American roads are so dangerous. This was from the Financial Times. Two things worsen. This is pretty interesting. The total number of miles driven by Americans increased. U.S. cars are getting bigger, right? So Americans are committed to their cars. Actually, 63% of people chose to drive for trips less than a mile. So I guess we're lazy.
Okay.
We're tending to drive for those quick trips. Vehicle sizes, larger cars, more deadly to pedestrians. And here's the last interesting point. Another theory is that the rise of homelessness in the U.S. could be pushing pedestrian deaths higher. So all those things.
Yeah.
So the
what they're
FT
saying.
is analyzing our roadways.
Yes.
Okay.
Well, this is John Murdoch. John Burns Murdoch was outstanding in COVID. He's the one that did all the charts everybody stole from, and he stole them from heavyweight academics. I was fascinated, Laura, in that article, Lisa Mateo, about the speed differential between us and Canada. And do you know where I saw mental speed? LA. I'm sitting there with a cigar in my hand on Sunset Boulevard in LA, and I'm looking at how people drive in LA to go 3 blocks.
Yeah.
I mean, they're going 45.
Yeah.
We're going 25. I don't get it.
My driver this morning was flying on the turnpike.
They do fly.
Oh my goodness.
What do you got next?
All right. Millennials going to golf communities. So move over, boomers. The millennials are coming in. Real estate brokers telling the Wall Street Journal that they're tired of paying more for less in the city. A lot of them are turning 40. They like the neighborhood golf feel.
Yep.
Yes. The clubs are catering to this younger crowd. So, and
What do you think, Paul?
Yeah, I mean,
since you know the community.
yeah, our club it's been about families since the beginning. But again, I think a lot of folks are relocating. You know, they've left during the pandemic some of the urban centers, East Coast, West Coast, and going to the Carolinas or Tennessee or Texas or Florida, and those places. They know how to do those golf community things. They're pretty good at it down
You know, there's no one listening now on YouTube who's a worse golfer than me. And I'm I think I should go out do Top Golf.
Oh yeah, you'd have
You know,
fun.
do they serve beverages?
They have adult beverages there, and you will have a very good time.
I mean, good morning, Top Golf. I mean,
is
you want
fun.
can we do a package with them?
Sure,
An endorsement?
sure. Yeah,
Bloomberg
absolutely.
Surveillance brought to you by Top Golf.
We'll do a remote from like Top Golf, Fort
I
Lauderdale,
love it.
or Las Vegas.
It's one of my favorite places. Okay, this is from Consumer Affairs. A survey conducted by Lance Surety Bonds. It found 25% of homeowners who plan to sell their home in the next 12 months plan to do so without a realtor. So that's the interesting thing, that a lot more homeowners are home sellers are choosing not to go with the realtor. I've actually seen the signs in the homes around my community, for sale by owner,
Right.
a lot more now.
To save
than
on
I've
the real
seen.
What do you
estate.
think? What's your take?
There's a
on
lot
this
of paperwork
from your
involved.
childhood?
I wouldn't want to take that on. There's a lot of paperwork that I would not want to get wrong.
I don't remember the details, but the fam at one point a million years ago, I can't remember if they were buying or selling, and it was ugly.
Yeah.
I've always used an agent and just kind of rip it. But I found what the
I used
agents didn't get this time when I was selling some homes recently was with the pandemic and the surge in home values, they did not have a good sense of the market. Because the market they'd never seen a market like this, and so they gave me the price. I said tack 20% on top of that. They argued vehemently against it,
And you got it.
I got it 15 minutes before we even put the
Is
sign in the ground.
6% dead?
I think so, right? With this new
I don't
rule?
know,
I
Lisa,
think this
you
with,
know.
with this new
We're at
rule.
7.1 right now.
No, your mortgage. I'm talking about the
mortgage.
fee.
Oh, the fee.
You know, because
yes,
that-
the NAR. Yes.
So I don't know. So we'll see. All right.
Okay, thank you. That's newspapers and
But you need this one. You need the next one, Tom.
Oh, yeah, it's a Friday.
Oh, we got one more.
We're
One
talking
more.
about
You're gonna like this
rock group Kiss.
Yes.
Okay, they're voting to get Kiss Corner on 23rd and 8th Avenue in Chelsea.
That works.
Some people want it, some people don't. I didn't actually realize that's the corner where their
come on.
Dress to Kill album was, where they took the picture.
Yeah, but you put they're not going to put up like an obelisk.
Just a sign.
It's like a little
Just a
sign.
little sign.
exactly.
But some people don't want it.
No, you listen to me. This is important.
This is Kiss.
Yes,
I
it's
drive
Kiss.
home every day, and on the hill of Spanish Harlem, I come down the hill, and there's a little green sign of the people from Puerto Rico that gave their lives in World War II.
Yep.
That's equivalent to Kiss. Now, come on.
Well,
I mean-
on Ludlow
I mean-
Street, guess you're probably one of your favorite bands on Ludlow Street, the Beastie Boys. They have a sign.
Yeah,
Tom.
you know,
So,
they do.
the Beastie Boys can get a
Lisa
sign.
And they
were
Kiss
trying
can
for a
get
long
sign.
time.
Alex Webb, thank you. Look for him in Three Body Problem next season. Lisa Mateo, thank you so much. I don't have time now to go into it. I'll go into it in the next hour. I can't say enough about Richard Betts and what he did to modern music. Dead at 80, a great loss to everyone of a certain moment.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Well, I got good news and bad news. The response out on live chat YouTube TV is, I'm sorry. My golf game's got to get better at Top Golf. I need a craft cocktail from Top Golf as always. Good morning out on YouTube, and we'll look into that here in the coming. Swing away and all that. It is an interesting day. It is a day of markets. It is a day of interest rates higher. Chinese yuan I haven't even talked about. Went through 7.24 today, a weaker renminbi, weaker Mexican peso as well. All of it pushed aside by the politics and the continued conflict in the Eastern Mediterranean. We are honored to bring you one of our best. Henry Meyer will join us here in moments. Bloomberg Surveillance this morning brought to you by CohnReznick. Advisory Assurance Tax. Let CohnReznick's enterprise risk advisors help you build confidence in your supply chain using data analytics. Visit CohnReznick.com. And thank you, CohnReznick, a charter sponsor of everything I do. Thank you, CohnReznick. Here's what we're going to do. We're going to go to the Business Flash, go to Henry Meyer, and then we're going to have a really good conversation with Anastasia Amoroso, who was brilliant last year. Always brilliant. Our Bloomberg Business Flash, Lisa Mateo.
Thank you, Tom. We've got right on the screen on tension brewing in the Middle East. Right now we have NASDAQ futures down 0.3%, Dow and S&P futures down 0.1%. Want to turn to commodities next and check in with Brent crude. Right now it's at $86 a barrel. It came down from $90 earlier this morning. NYMEX crude at $82 a barrel. Over to the 2-year yield at 4.97%, down a basis point. The 10-year yield at 4.59%, down 3 basis points. To earnings we go. Procter & Gamble, it boosted its profit outlook, but right now shares are down nearly 1%. And American Express reported revenue topped estimates the first 3 months of the year, but shares right now down about 1%. Finally, Paramount, they are up. They're up 9%. The New York Times reported Sony and Apollo may team up in a bid for the company. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. He is esteemed, a tour of duty, a lengthy tour of duty in Moscow. Henry Meyer is expert on what's going on. This linkage here, as we heard from Secretary Blinken, the linkage of Ukraine, of Russia, of China, and of course over to the Western world and all that we saw overnight in Israel and Iran. I look at the movable chess, Henry Meyer, and all I can suggest is we flew over Jordanian and Iraqi airspace if we're Israelis. How will the Russians respond? What do you think?
I mean, obviously for the Russians, I would say that the situation is beneficial. I mean, first of all, since the beginning of the war that started on October 7th when Hamas attacked Israel, this has deflected some of the attention from Ukraine. And of course, the alliance between Iran and Russia has grown tremendously in this period. I would argue that for the moment, Russia doesn't need to get more involved than it does. But clearly, the military assistance that it's providing to Iran and Iran is providing to Russia in Ukraine is a major factor and a major challenge to the United States and its allies.
Our top life people secondarily or tangentially mention issues in Syria overnight as well. What is your reporting, Henry, of what we saw in Isfahan, south of Tehran, in the alleged activities at Syria states in their nation?
Well, I mean, obviously, this whole it's a long-term standoff between Israel and Iran and its proxies. We saw that the attack that Israel carried out on April 1st was obviously hugely important Iranian military targets. And of course, there has been criticism of Israel's approach because we are now potentially in a attack escalation. We'll see, the details have come in, what happened overnight.
Right.
So far, Israel attack appears to have been limited in scope, and we'll see whether the Iranians will respond.
Henry, thank you so much. Henry Meyer on short notice this morning, and thank you to Ethan Bronner and all of our Tel Aviv News Bureau. You keep score of the people that get it wrong. That's the easy part.
Yeah, I love doing that.
Why are you looking at me? But then there's the people that get it right. Anastasia Amoroso, somewhere in the vicinity of early last year, nailed the bull market. Scary, nailed it. I'm really curious what the gentlelady from iCapital says.
Anastasia Amoroso joins us right now. She's the chief investment strategist for iCapital. Anastasia, we've got a little bit of a drawdown here, 5%, give or take a little bit. Is this a buying opportunity? Is this a buying on the dip opportunity? Or do you think there's more correction to go in this market as the market discounts? Maybe a Fed that's going to be a little bit less dovish than we initially thought.
Yeah, well, good morning, Paul and Tom. And I do think this is a buying opportunity. You want to buy this dip, but I would say you want to buy it gradually. And the reason I say that is because when you look at the technical setup now versus where we were in the beginning of April, it is much, much cleaner on certain measures. For example, bears are back, relative to where they were to start the year. You also had a correction from overbought levels to now near oversold levels. You have stocks that are actually trading at 1 month lows. And so all of those indicators suggest that we have a much cleaner technical positions. But there is a but from the perspective that we have traded down below some of the key moving average levels. We have traded down below some of the key thresholds for some of the systematic investors. So if we do continue to get this cocktail of uncertainty from geopolitics and the Fed and the macro, I could see some more selling pressure on these markets. Now, I do think it ultimately resolves, because the reason why we say investors should step in, because many investors are sitting on 20 or 30% cash that they need to put back to work just to get back to their strategic allocations. So I think as those investors step in, as the buybacks come back into play, and frankly, as we get better news flow, I do think the market can pick back up from here. So I would buy this dip, but we just do that gradually.
Anastasia, since we've, many of our listeners, investors, all they've ever known is technology leading the stock market. Should we be looking at tech on this dip here, or are there some other sectors that you think might have better risk-reward opportunities?
It's tech and other sectors. And, I think I'm always going to like buying tech on the dip, because tech is where the growth is, and that's what really drives most of the earnings growth. And so if you look at semiconductors, for example, they were in a stellar run, but they have corrected some. But at the same time, I actually expect this year is going to be a growth year in terms of revenues for the semiconductor industry. So it's not just about multiple expansion. So I do like that. I would buy semiconductors on a dip. But looking outside of tech, Tom, I would look to some of the cyclicals like industrials, materials, and of course, energy, because the big thing that I feel like is not very well talked about is this uptick in global manufacturing that is starting.
Yeah. Anastasia, we've got a basic idea of a better nominal GDP. Inflation up a little bit, GDP up a little bit, at least not the doom and gloom that everybody was predicting. Do we have any knowledge of what the revenue dynamics are going to be sector to sector? To me, the great miss is they may come in better than good.
Yeah, I think they just might, Tom. I mean, going into this quarter's reporting season, the bar has actually been reset lower. You had a lot of companies that issued negative guidance, which I actually view as a positive, because it means it's out there. It's all about what's already priced in. We also had a downwards revision for the first quarter earnings, which again means companies may actually be able to beat that. But as I look, broader, and I look at the number of earnings revisions upgrades for this year versus downgrades, the upgrades actually outpace the downgrades for the United States this year and next year. So I think there is a positive story. And the reason why I think cyclicals are an interesting place to position is because clearly their earnings have lagged the technology sector. But if you do have this broadening out of manufacturing activity, I think things beyond semiconductors can experience an upwards earnings revision cycle.
Anastasia Amoroso, thank you so much. With iCapital this morning, a tone there of, did I hear she said buy the dip? I mean,
sure. I think that was the lead.
Put her word on it. We'll save that for review 6 months from now. Futures, -8. With our news in New York City, John Tucker.
All right, Paul and Tom, Iranian state media confirming an attack by Israel in the early hours today. Israel launching a retaliatory strike on Iran following last week's missile and drone barrage from Tehran. An explosion was heard in Iran's third biggest city. Well, the incident followed days of frantic diplomacy from U.S. and European nations. Following the strike at the G7 summit in Capri, Italy, Secretary of State Anthony Blinken said the U.S. is committed to Israel's security and committed to de-escalation.
You'll see soon in the G7 statement a commitment to hold Iran to account for its destabilizing activities, holding it to account by degrading its missile and drone capabilities. And yesterday, the United States announced additional sanctions on Iran.
Well, the Wall Street Journal is reporting the Biden administration is considering more than $1 billion in new weapons deals for Israel. The proposed weapons transfers, which would be in addition to those in a military aid deal currently before Congress, would be among the largest to Israel since it invaded Gaza. Tesla recalling about 4,000 Cybertruck pickups to rework or replace accelerator pedals. They can dislodge and cause the vehicle to unintentionally accelerate. Tesla receiving notice of 2 customer claims related to the issue. Never a good thing. 12 jurors, 1 alternate, have been selected for Donald Trump's first criminal trial in New York, with the former president accused of falsifying business records to conceal a sex scandal before the 2016 election. The opening arguments could now start in the case as soon as Monday. They still have to pick some alternates for the jury. That could happen today. And global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg Radio. Paul and Tom.
Got to cover it this weekend because for years I had to say basically New York City sports couldn't get out of its way.
Right.
For whatever reason. And there were other cities from time to time that did well. But this is a magical and recently original weekend for New York City.
Rangers and Ari, help me here. Rich, help me. Rangers, Knicks, Islanders. So Rangers, Islanders, and Knicks. So we got those in the playoffs. That's a good thing. The Yanks and the Mets play. I mean, it's just, there's plenty going on out there.
Is Ovechkin? It's Ovechkin against the Rangers. Is that basically a version? Yeah. And are we gonna have fight night? I mean, we covered that a couple days ago, but you got the thug for the Rangers, and you got Tom Wilson, who basically is a codification of our youth for the Capitals. What do? Drop the gloves on the opening face-off?
No. All right. No, I don't think so at the moment. But we got some it's
Bruins are playing the Maple Leafs. You know how that works out.
Oh, boy.
It's like the 15th year in a row they've played. Toronto will win guaranteed the first 2, if not 3 games. And then it happens.
What's going on with our friends up north there? The Leafs and the Canadiens.
Oh, it's a long and sordid detail. Thank you to Mindy. Mindy's in charge of my events, and she got me up there. I got to see. I was in like in the 7th row. Their star is Matthews is the real deal. I learned that.
Okay.
He's like, wow. I mean,
playoff hockey. Now I will pay attention. I'll start paying attention.
Yeah, it's a whole. It's like a lot of other sports. Like a whole new game.
Yeah.
After all, and all that. We're not talking Red Sox. We're Red Sox free until. I don't know if they're out of contention yet. We'll have to see on that. Futures -6. They improve off of the shock this morning of what we saw with Israel and Iran. Futures -6. From New York City on Apple CarPlay on YouTube, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are lower after Israel's reported attack on Iran. Right now we have NASDAQ futures down 0.1%. Dow futures, S&P futures, they are little changed right now. Over to commodities, we have Brent crude, $86 a barrel, NYMEX crude, $82 a barrel, and over to gold. Spot gold is higher at $2,379 an ounce. Over to the bond market, the 2-year yield at 4.97%, down a basis point. The yield on the 10-year at 4.59%, down 4 basis points. Want to point out Bitcoin, it's at 62,542, and that comes ahead of Bitcoin halving due to begin later this evening. Over to shares of Taiwan Semiconductor, they continue to fall. They're down 2% right now after lowering its chip market outlook. Apple shares are little changed. The company pulled some social media services from its Chinese app store. That includes Meta's WhatsApp and Threads. That was in response to orders from Beijing. And we have Meta. They're down 3%. Mark Zuckerberg said the company's going to introduce Meta AI across its social media apps. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciated. Ludlow's awake.
Is he? Okay.
Ed Ludlow's awake. I
West
mean, here at
Coast.
the crack of it, it's early for him. He's out in the West Coast. He's like, Tom, you haven't, I'm in the morning over Dickie Betts. We're playing. You're going to hear Jessica. We're going to do Ramblin' Man and all that. And yes, I promise on Monday and all through next week, all of our songs will be Taylor Swift.
Oh, boy.
She dropped her album last night. That's what the kids say, Paul.
Yeah, I know.
They dropped the album. And between her, Jack Antonoff, and Aaron Dessner, it's just, they have these quotes that they have. It's like the way Dean Mackey does economics. It's just too much. They've like, I love you. It's ruining my life. It sounds like an economic, deep.
Yeah.
It's deep as well. Before we go to Dean Mack, we need to spend 2 minutes here on Olympics with Europe on $5 a day correspondent Charles Pellet. Are you going to swim in the Seine?
I've been reading all about this. I hope they get it all cleaned up in time for the festivities and in time for the opening event. I got to tell you, though, I'm feeling kind of like hungover this morning. I was out way too late last night. And
at the Mets?
No, I was at Javits Center attending an event on behalf of a fantastic organization. I want to put in a shameless plug for a group called Open House New York. How does this relate to Paris? Because there's what this organization does is they open all of these buildings around New York that you can go to visit for free.
Nice.
Places like the Brooklyn Army Terminal, places that you would never dream of going into, Department of Sanitation buildings.
I can't get into Minetta Tavern. Tavern.
They can't help with that.
But that's kind of the point here. These buildings get opened up so you can see them behind the scenes. The Woolworth Building, places like that where you go into. Anyway, I like people. I like having a drink or two, and I was there all night, and I was like, close the place down.
Let's get serious now.
Yep.
Éloignez-vous de la porte qui se ferme.
Charlie, are you gonna go to the Olympics on $5 a day, and are you gonna swim in the River Seine?
The answer is probably not, and I'll tell you why. Number one, the cost of airfare getting over there is prohibitive.
I was shocked.
My hack for that: fly to London, take the train over. That
I was
cut
shocked
out the middleman.
at how the prices have come up just in 2 months.
And there are a couple of low fare carriers that you can get, but I had a friend who was flying on one of those. The flight got rearranged, and she's holding Olympics tickets.
Charlie, we got to move on, but staying clear of the closing door. Charlie Pellet, thank you so much. Ken, we got to do it one more time. Give us Charlie Paris.
Éloignez-vous de la porte qui se ferme.
And that brings in Dean Mackey, who's been to Paris too many times with the .72 and does economics, wonderful economics, legendary at Barclays. Dean, what's the state of the American consumer?
The U.S. consumer is in very good shape, Tom. When we look at what are the drivers of consumer spending, the main driver is real labor income growth, and that's quite strong here. The labor market's strong, nominal growth is nominal labor income growth is quite strong, and inflation is low. The other thing that I think is underperceived is that household net worth relative to income is higher now than it was at any point in the 70 years prior to COVID. So households are richer than they've ever been, and their income growth is strong, and that's why consumer spending is holding up very well.
So, Dean, I think it's becoming increasingly clear to the markets that this Federal Reserve is going to cut rates much less frequently than we initially thought beginning the year. If that's the case, is there a risk that this Fed pushes this economy into a recession, or is this economy just too resilient right here?
I think the economy has a lot of momentum behind it right now. So I don't worry about a recession, even if the Fed didn't cut rates at all this year. I think the Fed wants to cut rates because it wants to avoid risks down the road. But I don't think rate cuts are actually needed right now.
Dean, so much of this, and of course, I don't want to get into the knitting of 0.72, but you have to advise some heavyweight people who are looking at thrust and tone. You just mentioned that nominal growth is surprised higher. Is the great fake out over to 0.72 that we're going to see much better revenue robustness in the coming 3 quarters?
I think that consensus estimates of economic growth are still too low right now. The consensus looks for a slowdown over the next couple of quarters, down close to 1%. We just don't see that happening. We think the economy is going to keep rolling along in the 2 to 2.5% range. There's a lot of tailwinds right now, and so that does mean good things for corporate revenues. And corporate profits are actually quite high right now. If you look at corporate profits relative to value added, they're close to the highest levels since the 1960s. And that's giving one of the reasons that corporations are continuing to hire right now.
That's kind of where I wanted to go, Dean, the U.S. labor market here. Talk about a resilient market coming out of this pandemic here. What's your view of the U.S. labor market? Because some people are calling out, yeah, it's strong, but it's not great. How do you view it?
I view it as quite strong. There's a few sectors that I think still have not fully hired up after COVID. Things like healthcare, state and local government, and leisure and hospitality are still way below pre-COVID trend lines. And that's why those sectors have been adding consistently every single month. And what's happened of late is that some of the other sectors that people think of as more traditionally cyclical have been picking up as financial conditions have eased. So I think the labor market has a lot of momentum. The other factor that is in the mix is that immigration flows have picked up strongly the last couple of years. And that the good news there is that means that we've had strong job growth without overheating the labor market. Really, if those immigration flows had not picked up, then I think we would have to worry about overheating.
Really appreciate the time. Dean Mackey, thank you so much. A perfect Friday brief there. Always the optimist, iconic at Barclays, and now with Steve Cohen over at 0.72. Mackey, scheduled. Lindor may be hurt at shortstop. They're thinking of bringing in Dean Mackey.
Exactly.
Pick up the slack there. Dean Mackey, thank you so much. We got a major problem, Paul. I mean, out on CarPlay, can you imagine the torture of people in their cars worldwide inflicting this show upon their children?
Yep.
I mean, it's painful. Can you imagine, Lisa, can you imagine being a kid in a car and mom or dad says, we got to listen to Tom Keene and Paul Sweeney blather on about LIBOR? I mean, it's
entertaining.
It's education.
Or a felony. We don't know. We don't know which. We say to an 8-year-old cherub out there with Dayton, thank you so much, Dayton Flyers, to an 8-year-old cherub, she moved right from Frozen and Let It Go over to Taylor.
Oh.
And we got to warn the children, the youth of America, we got to warn them that this Taylor album is like slit your wrists. I mean, I don't know what Jack did on this album. Tortured Poets.
Nice.
It's about all her ex-boyfriends.
Do you know there's a ton of bonus features in there too that came out? It was a surprise to fans.
Exactly. Bonus features.
A lot of bonus features.
There's a little allusion to Aston Martin with the Formula One China this weekend.
Oh.
I think she had a beverage with the gentleman who drives for Aston Martin.
Okay.
You know, he's like
she's everywhere.
Iconic. I don't know.
She's everywhere.
Protect your children is what I would say. Ivan says his 11-year-old's into it. We're next week, Ken. We're doing all Taylor next week. Okay, all Taylor, nonstop, 5 days.
Oh, geez.
Taylor songs. I'll listen to Tortured Poets this weekend. It is as Paul says. It's dropped. What's gone up are futures, now -2. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures right now as the market starts to take a step back after heating up on Middle East tension. So we have NASDAQ futures, they're down just 0.1% right now. Over to the 2-year yield at 4.96%. That's down a basis point. The 10-year yield at 4.58%, down 5 basis points. Want to check in with commodities? Again, we have Brent crude at $86 a barrel, NYMEX crude $82 a barrel, and over to spot gold higher at $2,381 an ounce. Going over to Google, they're down 0.1%. It's consolidating its workplace team structure, and they're bringing it under Google DeepMind. Their CEO said it's going to help speed up development of AI products and its services. Over to Tesla, down nearly 1%. It recalled nearly 4,000 Cybertrucks. The problem is the accelerator pedal may dislodge, become trapped, and that will cause a vehicle to accelerate unintentionally and causing a crash. And since we're talking Tesla, let's go to its CEO, Elon Musk, and his ranking on the Bloomberg Billionaires Index. As of today, Musk's $170 billion net worth has been surpassed by Mark Zuckerberg, whose total net worth rose to $178 billion. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. This is a joy. It's been way too long. You should be in here like on an every 10-day basis. I'm going to explain this as clearly as I can in as short a time so as to not waste any time. We need to hear from Lakshman Achathan. And that is that there's a way to do economics where you look at series, lines on a graph, and you try to extrapolate out or guess out short-term, medium-term, and long-term. Long ago and far away, before Alan Greenspan, I should say, was a guy named Jeffrey Moore. In fact, Jeffrey Moore's student was Alan Greenspan, and this owes very much to the work of Ed Hyman, who was in here this week with C.J. Lawrence years ago. You got to look at the data. You have to look at the cycles, and here's the key phrase, of business. Carrying this heritage forward with leading indicators from the Economic Cycle Research Institute, Lakshman Achathan. An honor to have you in here, Lakshman. I can't imagine just, the pandemic and coming out of it's been like. Can you do cycle research given a health event like a pandemic and given the massive 3 stimuli we've seen from the federal government?
Sure, absolutely. The critical component is the inflection point in this cycle. So the premise, going way back, and thank you for going back, Dr. Moore, who was Greenspan's teacher, his teacher was a man named Wesley Mitchell, who defined what a cycle was, what a business cycle is. So we use these phrases around a lot now, but 100 years ago,
it's original.
They didn't know what it was. And so we have this ebb and flow, the upswing and the downswing in free market-oriented economies. Look, it's the best way to organize an economy.
Right.
The Achilles heel is it has a cycle. So when you approach these turning points, what's the best tool to understand the risk? And we have found, and this is over 3 generations now, so we've been testing this, that a leading indicator approach where it kind of flags the risk of a turn is a good complement to the econometric model approach, which is really good in between the turn.
And the key thing there that's religion, folks, in the business of not losing money is a good complement. Did you catch the higher economic growth of the last 3, 4, 5 quarters?
Well, first and foremost, in 2020, we said it was going to be a short, nasty recession, and then we would be off to the races. So it's hard to remember, but there was a lot of hand-wringing in 2020 and 2021, and we were looking straight up. Now, the cycle indicators turned down sharply. So in 22 into 23, the cyclical impulse was very much to the downside. We actually had 2 negative quarters of GDP, but that's not a recession. I'm sorry. You have to have negative jobs growth. And so we did not have a recession in 22, 23, even though the cycle indicators came down hard. The reason is, as Tom just alluded, this backwash of COVID. There's 2 key pieces that we're dealing with even today. The backwash is still here. One is that you have a huge constraint, a generational constraint on the labor market. So under the Trump administration, you had about 4 years of very low, if nothing, on legal immigration. That knocks out several million people from the labor force. Post-COVID, a lot of people didn't come back. That knocks out millions more. On top of a highly constrained labor market, we put 7 trillion. Remember Senator Dirksen? He used to say $1 billion here, $1 billion there. That's a lot of money. Now we're talking trillions here and trillions there on top of a tight labor market. Very hard for jobs to go negative. So much foam on the runway. Hard to have a recession. Now, let's get to today. Leading indicators are actually firming on growth. They're starting to actually firm a bit. And the other thing I want to get on the table is there's a global industrial upturn. That's not country specific. That's around the world. The manufacturing floors are getting a grip. And then separate cycles, because you alluded to Greenspan. There's an inflation cycle we have to contend to. It's different than growth, and that's moving up.
So, I mean, again, that is probably one of the key issues for this Federal Reserve as they think about inflation. How does inflation factor into this? And is there a reasonable scenario where this Fed doesn't have to cut rates?
Yeah. The short answer is yes. Okay. There's so we use these. There's the target, which is CPI inflation or PCE deflator or all these things, and they define the cycle, and we can say there was upswings and downswings. We're in a downswing for the most part. But there's a lot of signs that some of the coincident data is bottoming. And the reason I'm suspicious about that is because of the leading indicators of inflation. Internationally, they've turned up. In the U.S., we're the one holdout where instead of turning up, our future inflation gauge has been flat for over a year. So we really were prepared for the sticky or higher for longer or whatever has been going on. And now, with the knowledge that international inflation cycles are largely synchronized, we're really suspicious that the U.S. could go up.
I'm going to go away from you and go to lines in the chart and all that.
Yeah.
My chart of the year right now is a yield to worst global aggregate index. I'm stealing this from someone, folks. I'll cite him next Monday. But the answer is I'm out 4 standard deviations from the Volcker disinflation out to where we are now, which is 4.00% yield on a global basis. To me, that's reversion to the mean. Does Lakshmanachathan and ECRI believe in reversion to the mean?
Yeah, it'd be nice, but it keeps going. That's the thing. So we have cycles, and they don't know about means, right? They're cycling up and they're cycling down.
I'm busting his chops. He knows it. I'm doing it. Show this. Come on, Lakshman. Stay with me here. And you don't believe in reversion to the mean.
No, it's going to turn. It's going. I mean, I think if there's a headline here, it's that inflation is cyclical. Sometimes people forget that. It doesn't go down to your target and hang out there. It likes to bottom and turn up and peak and turn down. And the Fed has been learning this very difficult lesson since, might I say, since 2018. They've been learning this. And I don't think they've really gotten the lesson quite yet. Maybe here, I mean, how many pivots have there been for Powell now? There's been a few.
Yep.
We're very transitory.
Yep.
Transitory is like anathema to Jeffrey Moore.
Exactly.
Just so you know.
All right, so it's interesting here. We look at this economy.
Yeah.
I think, have we taken recession completely off the table here?
Well, so when I talk about cycles, I'm looking at a couple quarters.
Okay.
So what happens after that, I think, is yet to be determined, quite frankly. What really happens, the way you get a recession is the cyclical impulse moves to the downside, window of vulnerability opens up, and can you have a shock? The shock and the window of vulnerability gives you the recession. Because we have plenty of shocks without recessions. This is the differentiating factor. There's so much, I mean, 7 trillion, right? This is a big number.
Yeah.
Plus, forget about it, I didn't even talk about the Fed stimulus for 2 years before that, which was off the charts. So that's a lot of foam on the runway on a tight labor market. It was virtually impossible to have a recession. But elsewhere we did. Other countries that didn't do that had recessions.
I would suggest that we have a new tilt back to ECRI kind of research within conventional economics. Do you feel as abused now as you were 20 years ago?
Well, look, a lot of money makes things feel good. It covers up things, right? And we've had a lot of debt growth. The really big question is, are the bond market vigilantes going to come back? Are they going to stand for this or not? And that's what we have to see.
Well, come back at 6 standard deviations from around the yield.
Let's do
5.5, 6. What a joy. Lakshmanachathan with us. We'll get him in here more often. He's rumored he lives in New York City as well. Our economic indicators, our discussion of economics, is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, Go where you grow. Visit commonwealth.com to learn more. Green on the screen with our news in New York City. John Tucker.
All right, Tom and Paul, Israel launching a retaliatory strike on Iran this morning. This comes less than a week after Tehran's rocket and drone barrage on Israel. The targets were military bases near Isfahan, home to nuclear facilities and factories that are associated with Iranian drone and missile production. Secretary of State Antony Blinken at the G7 summit in Capri, Italy this morning had this to say after the strike.
We're committed to Israel's security. We're also committed to de-escalating, to trying to bring this tension to a close.
Iranian state media downplaying the attack. A jury has been seated in Manhattan in the criminal case against Donald Trump. Let's get the update in this report from Bloomberg's June Grasso.
12 jurors and one alternate juror have been sworn in Trump's hush money trial. The jury of Manhattanites includes a sales professional, a software engineer, a security engineer, a teacher, a speech therapist, an investment banker, a retired wealth manager, and several lawyers. The trial judge says he hopes to have jury selection wrapped up today and opening statements on Monday. In New York, June Grasso, Bloomberg Radio.
And the Biden administration this morning finalizing a plan to prevent oil development across more than half of the U.S. government's mammoth petroleum reserve in Alaska. They also set the stage to block road construction that's essential to opening a copper mine in the state. The move comes as the president tries to gain support from young, climate-minded voters. And San Francisco, the latest U.S. city, preparing to receive a pair of pandas from China, the continuation of Beijing's famed panda diplomacy. San Francisco Mayor London Breed announcing the panda loan in Beijing today. China is the home to the only natural habitat for pandas, owns most of the black and white bears in the world. New York City, not on this list.
Yeah, you know who's been there? Steve Roach. There's some great photos of Steve Roach like sitting
with the pandas?
With the pandas right around him, like in Chengdu.
Oh,
you go
like in a natural setting, or
natural setting. Like you go out. I think west of Chengdu, up in the mountains quickly. It's really quite close. And Dr. Roach, with all of his travels of China.
Now, pandas we associate with being gentle giants, but I think they would rip your face off.
Yeah, I don't think.
Given the opportunity.
Sure. We're just talking like this, folks. So on YouTube, they run touchy-feely panda videos. Thank you for that. All right, now I want to talk some abuse here right now. GBRT, this is a live chat, Paul, on YouTube.
Of course.
I mean, it can get mean. Okay.
Yeah, no question.
Tom, laugh out loud. My kid always imitates your voice saying good morning.
We all do.
And she sees, like with Bloomberg surveillance. That's just cruel and unusual.
I'm Tom. We got to get audio of this kid.
Yeah. Now, what we got to do, we got to need audio of the kid. The best ever was Keith Grossman, who ran all of our publishing and ads. Just wonderful, wonderful guy. He's going on. I don't know he's like in charge of congestion pricing for New York City. And Keith Grossman he owns the high ground on that. But thank you for having your children face that abuse every morning. We appreciate you listening. We know drive times are part of America. We're thrilled on Bloomberg 1130 and all of our radio and on Apple CarPlay to be part of your drive time. America, again, it's worldwide now on Apple CarPlay. And all I can say about YouTube is, YouTube keeps showing up. He bribes me with bags of pretzels and Cheez-Its. Yep. You see that? He's never there. He's always got to buy Cheez-Its, Lisa. Cheez-Its are a little orange cracker. I know you've never had one.
They're not. You got to go for the skinny pop.
The skinny pop.
Oh, brother.
It's one of my faves.
Do you know there's a photograph this week of Lisa eating her gluten-free yogurt?
Goes great with a glass of Chardonnay, I hear.
There you go. It's Friday.
I was out with Gura. I had steak and potatoes for breakfast. That was great. Futures at -3. The VIX 18.67. Stay with us. Lots going on to get you into the weekend. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, we've got red on the screen. We have NASDAQ futures down 0.1%. Dow and S&P futures are little changed. The 2-year yield at 4.98%. That's down a basis point. The 10-year yield at 4.60%. That's down 3 basis points. Over to commodities, checking in with Brent crude, $86 a barrel. NYMEX crude, $82 a barrel. And as far as spot gold, it's higher at $2,383 an ounce. To earnings we go. We start with L'Oreal. They're up 4% in Paris. Reported better than expected first quarter sales. Strength in Europe, North America. Well, that really helped offset that slowdown in shopping by Chinese travelers. And we have news from Nordstrom. They're up nearly 1%. It formed this special committee to evaluate a founding family proposal to go private. And finally, shares of Netflix still lower. They're down nearly 7% right now, reported first quarter earnings. But the second quarter revenue forecast, that was a bit of a disappointment. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate all this, Lisa Mateo. It's been a great week. If Damian Sassower is here, he would be sure that Paul Sweeney and I would know this is the interview of the day. We're going to get in as much time with Reza Baquir as we can before Geeta Gopinath at the International Monetary Fund. Dr. Baquir is the former governor of Pakistan's central bank and also studied with Ike Green and Company out at Berkeley as well. Dr. Baquir, what do we see with a resilient dollar? And I'm beginning to see EM currencies really give way. What I see in Indonesia, what I see with renminbi through 7.24, even Mexico has come back above 17. Are we edging towards not a currency crisis, but currency stress within emerging markets?
Well, a strong dollar has big impacts on emerging markets. Tom, Paul, since 2011, since the dollar has been rallying, it's risen over that long period close to about 40%. And that's a big rise, which what it means is that if emerging markets had done nothing else, their currencies would be weaker by that much, 40%. Many countries, it's even weaker than that. More than that, for many emerging markets that are highly debted and have big foreign currency debts, including Pakistan, many others, what that also means is that their debt service expenditure goes up by that amount for nothing of their own accord. It's externally driven dollar strength can have big consequences for emerging markets. And for many emerging markets that are already at record debt levels, many emerging markets having gone through defaults, Sri Lanka, Ghana, others, it adds to the menu of problems that they're dealing with.
Is the U.S., this is a conventional idea in America, Dr. Baquir, and with your tour of duty and watch with Egypt particularly, you're hugely experienced with this, let alone the challenges of Pakistan. How do you respond to the idea of so many of our listeners across America that basically America's funding the IMF to bail out, as a cliche, Argentina? Is the stress being set now over more countries, or is it still America to the rescue?
America is the largest shareholder of the International Monetary Fund. The International Monetary Fund, the IMF, is the lender of last resort. Being the largest contributor means that it's the most powerful country in the world, but that also comes with the responsibility. And that responsibility means that when the firefighter, the IMF, is called out to a rescue, it is going to be the U.S. money that is the largest at risk. So on the one hand, we have power. On the other hand, with the exercise of that power comes the responsibility, comes the accountability, and comes the political noise that the U.S. taxpayers' money is being used to bail out. What would be the alternative? Would it be that the U.S. wants less of an ownership in the IMF? I don't think so, because having 17% of the IMF is a very influential position to have.
Dr. Baquir, we have to leave it there. We go from the former central bank governor of Pakistan over to the leading economist of India. Now with our Lisa Abramowicz in progress, Geeta Gopinath of the International Monetary Fund.
Much more than trade within geopolitically aligned firms. That's also true for foreign direct investment. So we are seeing these shifts, but at the same time, we're also seeing the role of connector countries like Vietnam and Mexico that are coming in and channeling supply chains around the world. And all of this can raise the cost, ultimately, of goods for countries.
Which is really the key question here, which is how much structurally higher is inflation in this new era of fragmentation?
This is a main concern, and these are numbers that we have to determine. And now, we're still at an early stage, so we aren't looking at very dramatic movements over here. But if this process continues, it could lead to much more inflationary pressures.
Or do you have a rate in mind about, is it 3% or 4%? Is that the kind of rate we can imagine in this world?
Right now, based on the scale at which it's happening, I wouldn't say it will be that large. But again, the risk is if it heads in a much more worse direction.
It seems like this is the path of travel. Everyone's talking about fragmentation. Everyone's talking about protectionist policies. In an era where so many countries seem to be rejecting free trade, what's the IMF's role?
We have a really important role to play as a multilateral institution. You know, the world is moving away from a rules-based trading system. So what needs to happen is diplomacy and pragmatic approaches. And that's what we're trying to push for through this meeting, getting countries together to work at least on areas where they can agree on, like on services trade. There's much more progress that's happening on services trade. We need to work together on debt issues, on climate issues. That will hopefully rebuild trust and slow the process of fragmentation.
We also see an increase in geopolitical tensions, and we saw this overnight with the attacks in Iran. There were some real questions around what the price of oil would do. It did nothing, but that's as people were talking about de-escalation. Ed Yardeni yesterday was talking about the possibility of an oil shock akin to the 1970s, with oil prices going to $100 a barrel, should this escalate. Do you foresee a similar type of thing happening?
This is a risk we worry about. If there is a serious escalation, which means a much more wider regional escalation than what we've seen so far, then yes, we could have a severe oil shock. But we're not there yet, and as you can see in terms of oil prices, it went up some, but it's come back down. We have supply excess capacity in Saudi Arabia. We have non-OPEC countries putting a lot more oil out on the market. So there are other sources of supply that can, buffer these shocks. But if there's a large-scale escalation in the Middle East, that is a problem.
Is that the line in the sand, $100 a barrel, and that would consist of the shock?
I think if going up $100 a barrel would be problematic, but even going from here to $100 a barrel would be difficult for countries to deal with, who are still fighting the last inflation fight, which is to bring inflation back down to target.
One thing that the IMF has talked extensively about is concern about sovereign debt, in particular in the United States and the overhang there. What's the outcome of that? Is the fear of some sort of slugflation or just sort of a sluggish growth kind of picture because of the overhang? Is it higher rates and potentially a Liz Truss moment, which I've been talking about and get shot down all the time in the U.S., but is there something like that could potentially happen?
The U.S. is running very large deficits for a country where demand is very strong, and there is still the last mile in terms of bringing inflation down. So for all those reasons, the deficit, you can't have a deficit of 7% of GDP. It needs to be lower. And if you project out, it's going to stay at those high levels for a while. That has consequences, of course, for debt servicing in the U.S. But in a sense, the bigger problem is in terms of spillovers to the rest of the world. Because for the rest of the world, when you have so much of debt being issued by the U.S., that can crowd out the borrowing from other countries. Their cost of borrowing goes up, and their debt servicing costs go up by much more. So, I wouldn't say the U.S. has a debt sustainability problem now, but at the same time, when the U.S. is borrowing that heavily, that causes rates to be that much higher. It has implications for the rest of the world and for, corporations and households in the U.S.
How much higher? I mean, could you see rates staying here between 525 and 550 for the rest of this year, for even into next year?
That would not be our baseline. We would expect to see rates coming down. So, right now it's for getting inflation back to target. So we expect that will come down. It's going to take a little longer, but we expect that to come down. The question is whether it comes back down to what we saw in the decade after the GFC, And there, right now, that doesn't seem to be the case.
One thing that you talk about is this era of fragmentation is going to lead to a higher inflationary regime. Do you think it's appropriate for central banks to have a higher inflation target long term as sort of their goal? Say not 2%, but 2.5%, or somewhere between 2 and 3%, just because it is a different reality now?
Yep. So firstly, that is a conversation we should not be having now. We need to ensure that inflation comes back down to 2%. Monetary policy can pin down a level of inflation. Yes, if you're going to have a lot of volatility in that inflation statistic, that could create problems because we are in a much more shock-prone world. But again, that is a conversation for later.
For later, but it might be.
Yes.
Okay. Geeta Gopinath, I know, has to run. Otherwise, she will walk off the set because you have to get to a panel that you guys are hosting. That was wonderful to speak with you. Thank you so much, Geeta.
Thank you so much.
Lisa Abramowicz with Geeta Gopinath. I really can't say enough about her. Studying at Harvard with Claudia Golden, and just has really become a leading light and truly, Paul, ecumenical across the regional animosities and pleasantries of the International Monetary Fund. She has a wonderful read. They all have their own character. Kristalina Georgieva is from Bulgaria. She's very institutional. She basically grew up behind the Iron Curtain. There's a wonderful Eastern European, not certitude, but seriousness to Dr. Georgieva that's just wonderful. And then, for the people that know Raghuram Rajan and all that he did out of the financial crisis now at Booth School Chicago, there's an Indian sense from Geeta Gopinath, which with her American sense really has proved formative at the IMF. Hugely popular and too many things to talk about. Lisa could have done a 3-hour conversation there.
Yeah, and with Dr. Reza Baquir earlier, talking about the role of the IMF and the role of the U.S. in supporting the IMF, and still pulled in so many different places around the world, whether it be South America or Asia or Africa.
We're going to reset here into the 9 o'clock hour. And I really want to give you just a window into how our team works. With what was going on in Israel, in Iran, how oil did not move. And Brent crude, right now, help me, Paul, my eyes.
Sure, we got Brent crude, we got $86.50.
Yeah, 86.
Off a little bit here today, Tom.
It's off a little bit, but if you asked me to guess at 2 a.m., I would have said 92.
Yeah, you're exactly right.
And so what the team does and what our wonderful guests do, all of our guests know we're going to call them up someday and cancel. I mean, I'm sorry, we got breaking news. We have a jewel coming up here at the 9 o'clock hour. Christyan Malek will join us from London, Global Head of Energy Strategy at JP Morgan. For all of you on Global Wall Street, what a joy to have Christyan Malek with us to really talk about oil, something we sort of missed, not missed this week, but I think we've underplayed versus the other news. Paul, are we buying stocks here?
I don't know. We're a little bit just kind of sitting here pretty much unchanged here at this time here, Tom, right around 9 o'clock Wall Street time. The S&P's unchanged. Same with the Dow. Right. The NASDAQ off about 0.1% in futures.
We say good morning to all of you on Apple CarPlay across the nation. It's safer. It's better. You download the Bloomberg Business app. There's no cost. There's a lot of confusion about this. Like, do I get a fee from the Apple Store or Google Play? No.
I don't think we do.
You don't.
We priced this for John Tucker.
We priced this for John Tucker and Charlie Pellet. I mean, Apple CarPlay, it is free. So look into that. And on YouTube, thank you so much for the response on YouTube. Search Bloomberg Podcast. Great. I saw a photo of a cherub in front of a TV set. That's cruel and unusual punishment to force the child in your living room to watch this. We say good morning. And Bloomberg Surveillance, well, we're brought to you here at the 9 o'clock hour by Build America Mutual. Ensures U.S. municipal bonds that finance essential American infrastructure and provide guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. Build America Mutual. Invest in BAM. insured bonds. To get us started on the 9 o'clock hour with our Bloomberg Business Flash, Lisa Mateo.
You got it. And we have little movement in futures. This is about a half hour before the open. We'll head over to the bond market. The 2-year yield at 4.97%, down 1 basis point. The yield on the 10-year at 4.60%, down 3 basis points. Over to commodities, we have NYMEX crude $82 a barrel, Brent crude $86 a barrel, and spot gold higher at $2,382 an ounce. More debate over interest rates. New York Fed President John Williams said even a rate hike is possible if needed. And then we had the Fed's Raphael Bostic said he doesn't think it'll be appropriate to ease until the end of 2024. And finally, Neil Kashkari told Fox News Channel the Fed could potentially hold rates steady all year. Let's get to Procter & Gamble. Their earnings out, down 2%, boosted its profit outlook. That was thanks to steady price increases and also productivity gains. Amex, American Express, up nearly 0.5%. Reported revenue topped estimates the first 3 months of the year. Consumers really enjoyed the company's premium credit card offerings. And finally, Alphabet down 0.3%, consolidating its workplace team structure under Google DeepMind. And that's going to help it speed up the development of AI products and also its services. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Good morning to all of you on economics, finance, investment, on international relations. We've been making a running joke here about Javier Blas all fired up about olive oil. In Spanish olive oil, yes, I'm using it now, Javier, so you come back on air. But he's had a really busy week. Javier Blas owns the high ground on energy. And one thing he knows is the engineering school out of the United Kingdom is Imperial College. Christyan Malek at JP Morgan is out of the Imperial College Combine, and he writes brilliantly on oil economics, but particularly the bigger picture, oil macroeconomics. Christyan, before the pandemic, you were looking at building demand, particularly across emerging market countries, which would nudge us over $100 a barrel. Maybe the pandemic got in the way. Is now the time where we nudge above $100 a barrel?
Yeah, I think sort of unpack that. And hey, Tom, and congrats on this fantastic show. A couple of points to make, maybe just before we get to the oil prices. I think we're sort of passing a tipping point. I hate to use the cliche on demand, and I say that because, you know, when you think of statistics like 80% of the world hasn't been on a plane, there is what I call invisible demand that is essentially starting point in the sort of non-OECD world, without wishing to generalize, where vast populations are looking to high grade their living standards to a level that we enjoy here in the West. And so with that in mind, that incremental demand, that incremental dollar of demand for in the context of oil price, that's someone getting on a plane that hasn't been on a plane, or driving a car, or essentially lights on the street that didn't exist. All of that incremental demand is what is compounding to a point where we're seeing very strong growth, well past where we were in the pandemic. And that is the demand growth that's underwriting a much higher oil price in the future. So if you ask the question around $100 oil, I think ultimately it's inevitable, particularly given where the supply outlook is today.
The events we see, and I don't want to just focus on what we saw at 2 a.m. this morning, U.S. time, of Israel and Iran, but the answer is the experts to me have been surprised by Iranian oil production. It's been good. Do I have that right?
Well, the facts say that they're actually producing sort of 5 to 6 year high, and so in that context, it seems correct. I think what we're sort of missing here, and sort of talking about Iranian production and other, like for example Venezuela, is what is spare capacity in the world? And spare capacity, if you define it as two buckets, one OPEC, the other bucket is shale. You don't tend to think of spare capacity of shale, but it exists. It's the reservoir, it's the oil under the ground, and those two sources of spare capacity are still quite significant. I mean, one we can measure, OPEC is around 45 million barrels. The other, shale, well, there's still a very big runway. So combining those two things, and I heard your comments earlier about the oil price reaction, we're not surprised. I know that's sort of potentially a surprise to say that, but when you have that much spare capacity in the system, so to speak, any potential move in oil can be met through those additional volumes, be it from Saudi, from OPEC, and ultimately how shale responds to those higher prices.
Christyan, my colleague and I, Alex Steele and I, we spent a couple of days at the Bloomberg New Energy Finance Conference here in New York earlier this week. And again, a lot of the industry players coming together and talking about the transition to cleaner energy. From your perspective, where are we in that whole time frame?
Well, it's a timely question because we've come up with a 50-page report that's taken about 9 months to produce. I'd like to say that because sometimes it takes a lot of time to sort of break the back and understanding what is the energy transition of transition? How does it work in terms of the delivery of renewables? And one of the things that we've sort of discovered through the process of re-examining the energy transition is the macroeconomic backdrop has significantly changed. The variables have changed. Interest rates, government debt, cost of living, inflation, a geopolitical landscape that's structurally changed. And so with all those things combined, to then reassess the transition through that lens, what we've sort of unveiled, if you like, is the fact that it's not over, it's still going to continue, but a reality check is needed in terms of its pace, and more importantly, how we use fossil fuels, which we believe are undervalued and underappreciated. So to answer your question directly, the way we see energy transition faring at this point is a sort of re-examination of all the fuels that we can access in order to ensure that we don't have escalating energy prices, because the byproduct of a forced expedited energy transition will be much higher energy prices and pain for the consumer. And that will then, if you think about kind of like the feedback loop, that can end up forcing the hand of governments to do things that aren't appropriate at all because they're trying to meet the consumer at that point. So we actually think that it's very important to reassess the transition, working backwards from the consumer, working backwards from a large part of the world that don't have access to energy at all.
That's classic Christyan Malek there, Paul. I can't say enough how that changes the EM analysis, the Damien Sassower world, when he says there, listen to the consumption, listen to the demands, the desires, the aspirations of emerging markets. They're not worried like John Tucker is about can the Rivian find a place to recharge this morning in Summit, New Jersey.
Exactly. Christyan, I mean, we talk about the demand side. On the supply side, why doesn't America, who's now the biggest producer of oil, why don't our shale guys down in Texas and Louisiana just start cranking out more supply?
Great question. I mean, I think one of the things that we've looked at in terms of productivity and runway of shale production is as follows. When you look at what's under the ground, one of the sort of surprises to the upside on production in shale has been lateral drilling, getting basically drilling as far as you can. What's happening now, sort of putting it in layman terms, is we're getting to somebody's house, the fence. You can't drill under their house. So you need to now buy your neighbor in order to scale up your production. And that's exactly what's happening through the consolidation. And if you like, consolidation is we view it as a sort of red flag in the context of being able to generate higher productivity going forward. And again, in terms, continuing to grow underground. What does this mean? It means that shale production will continue, but it won't continue the same quantums, 1 million barrels a day of growth every year. That's not possible. But I would also flip it round. We need shale production. Shale production is bullish for the economy. Reason being is we need to be able to cap that upside going forward. So having that much Saudi extra production or capacity, having shale, it kind of gives me peace of mind that as much as we're very bullish in the future, oil pricing go to 150, it's important it doesn't overheat. And for that to happen, we need to make sure we have that production. So shale is sort of bullish, but counterintuitive, you put it that way.
Christyan, we got to leave it there. Thank you, particularly for the analysis of EM demand. Christyan Malek, of course, with JP Morgan London on oil. Red and green on the screen right now, a much improved tape off of the traumas that we saw 3, 4, 5 hours ago. With our news in New York City, John Tucker.
And Israel launching a retaliatory strike on Iran, Tom, following last week's missile and drone barrage from Tehran. An explosion was heard in Iran's third biggest city this morning. The incident follows days of frantic diplomacy from the U.S. and European nations. Following the strike at the G7 summit in Capri, Secretary of State Antony Blinken said the U.S. is committed to Israel's security and committed to de-escalation.
You'll see soon in the G7 statement a commitment to hold Iran to account for its destabilizing activities, holding it to account by degrading its missile and drone capabilities, and Yesterday, the United States announced additional sanctions on Iran.
The Wall Street Journal is reporting the Biden administration is considering more than $1 billion in new weapons deals for Israel. The proposed weapons transfers, which would be in addition to those in a military aid deal currently before Congress, would be among the largest to Israel since it invaded Gaza. Ukraine says at least 8 civilians were killed and more than 20 injured in a strike on the country today after Russia launched another barrage, straining that country's dwindling air defenses. Ukraine says its air defense is down 15 of the 22 missiles launched, all 14 drones, and a Tupolev bomber jet. And billions of dollars of desperately needed Ukraine aid depend on House Speaker Mike Johnson's resolve this weekend in pushing through a pretty complex foreign assistance plan. And this is going to involve the type of complicated political maneuvers and deal-making with Democrats that may roil a lot of his fellow rank-and-file Republicans. The move threatens to trigger a drive for his ouster. But what's surprising in all this is his salvation may come from Democrats. For example, Representative Adam Smith, the top Democrat on the House Armed Services Committee, says he wouldn't vote to remove Johnson from the speakership. And 12 jurors, one alternate, have been selected for Donald Trump's first criminal trial right here in Manhattan, where the former president is accused of falsifying business records to conceal a sex scandal before the 2016 election. Opening arguments, they could start in the case as soon as Monday. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Lisa, and Paul.
John Tucker, thanks so much. Netflix on the chin. I did not realize this. I mean, it's a 50-point drop, 40-point drop. I checked that, 40-point drop, 7%-ish. It's been in a lovely trend off the January celebration. Nice, tight advance, and boom. I did not. This caught up with me.
Yeah, it did. It's. I think it's surprising a little bit. Stock pulling back 7% here. The bottom line is they really beat on their most recent quarterly numbers, put up huge subscriber numbers, almost double what the street was looking for. But they are going to. They gave some guidance that was a little bit more conservative. Number one, and number two, they're going to stop reporting the subscriber metrics that have been driving this stock since its
really,
inception.
the sell side really went after them.
Exactly right. So, I mean, this has been, they're trying to get the street away from looking at subscribers. They're saying, hey, that's not how we manage our business. Yeah, exactly. Exactly.
Give me more data. Give me another column on the Excel. Do you know, I'm going to have to go into therapy here. Can you call up, Dr. Anthony, our therapist that we've got here
on staff?
Because surveillance has a staff therapist. Ludlow wakes up. Here's the tweet. There's literally millions of Americans waking up right now facing the choice of starting the day with Taylor Swift's new album.
Oh yeah.
Or listening to Surveillance.
Right.
I mean, it's brutal.
The choice is pretty clear to me.
The president of the Chicago Fed just retweeted that. Austin Goolsby's putting shade on me this morning.
Okay, all right.
I mean, how could you expect the gentleman, the head of the debate team at Milton Academy, Austin Goolsby, going after me off of this?
Nice.
It's
Very
just
good.
Too much. Good morning, Dr. Goolsby. Hope if you can get out of the Cubs and the White Sox, April, come on the show. We'd like to talk to Austin Goolsby. Red and green on the screen. That's an improvement. Good morning.
Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, little change with the Nasdaq right now, down 0.3%. Over to the bond market, the 2-year yield at 4.98%. That is little change. The 10-year yield at 4.61%. That is down 2 basis points. To commodities, Brent crude $86 a barrel, NYMEX crude $82 a barrel. Spot gold now lower, $2,373 an ounce. And over to Bitcoin, it's 1% higher at $64,659, and that comes ahead of Bitcoin halving, due to begin later this evening. We'll take you over some company news. Paramount up 9%. Apollo Global, Sony said to be considering a joint offer for the company. We shall see. And then we're learning more about the salary of Warner Brothers CEO. A filing shows David Zaslav was awarded compensation of $49.7 million in 2023. That's when the actors and writers went on strike. It's about $10 million more that he pulled in 2022. Warner Brothers up nearly 1% right now. That is your Bloomberg Business Flash. Tom and Paul.
And we got to take 30 seconds on this as well. Lisa, what was that? Apollo and four
Apollo
other
and
players?
Sony.
Yeah.
Sony. There we go.
The studio. They're looking for the studio, I think.
The physical plant.
Yeah, the Paramount
the
studio and all this stuff that they own, all the Top Gun.
I'm looking here at Warner Brothers Discovery, technically we don't need to go into it because we got such an important guest. But the answer is I'm buttressed up against the moving average, and 2 standard deviations down is $7.23. And they just keep paying Zaslav more money.
And
I don't get it.
No, exactly right. And he's taken them a lot of money over the years in stock. And now a lot of debt on that balance sheet as well, Tom. So it's a tough situation.
Early 2023 trend, 15 down to 8.3 at 1. We're going to see how Netflix opens up here, down 7% right now. I got red and green on the screen, a much better tape than before. And, both Paul and I we went to Eric. Thank you, Rich. I'm aware that we're not open yet. I get it. We're open. Excuse me. I failed. Paul, you and I, we were having SAS hour.
Yes.
It's Friday. Do you think he's on the course yet, or is he teeing off at 10
There's a little
a.m.?
frost warning, so he'll probably be off a little bit.
Yeah,
later.
I think I agree. I agree that this is girl who's got this great pedigree in Aegon here on emerging market debt. It's like a Damien interview. Why don't you say this?
I know, the proud graduate of Duke University. Jeff Grills joins us here, head of U.S. cross markets and emerging market debt at Aegon Asset Management. Jeff, for better or worse, Tom and I spend a lot of time on emerging markets. We got this Damien Sassower guy that keeps bugging us about emerging markets. What are your top conviction calls here as we parse through what we're hearing from the IMF this week?
Thank you very much for having me. So in terms of top conviction calls, emerging markets is facing a challenge with regard to where valuations are, but we still are optimistic on Latin America and African credits. Specifically within Latin America, Panama is one of our top choices there. Panamanian bonds have dropped as a result of a cancellation of a contract with First Quantum Minerals. Now it's priced in like a BB credit, even though it's still investment grade. And so once we get past the May elections, I'm hopeful that we can see a resolution and Panama can retain its investment grade status.
Right.
In Africa, Ivory Coast is a very interesting one. Ivory Coast came back to market earlier this year. They hadn't been in the US dollar market since 7 years, and priced at a very attractive, above double-digit yields. And with cocoa prices skyrocketing, Ivory Coast is going to be a tremendous beneficiary of that.
This is great. I mean, it's so romantic.
We've been looking for a play on
Panama
cocoa.
Canal and that, and a play on cocoa as well. I don't know which one to pick. I got to go there, Jeff. Ivory Coast. When you buy Ivory Coast paper, what currency is that denominated in?
So fortunately, this was a US dollar bond that they issued. So we're not talking about local currency. The depth of the US dollar market is massive. We're talking access to $2.5 trillion when you include both sovereign government debt and corporate debt. And this was the first US dollar issuance they had done in 7 years. They primarily issued in euro. So you're not talking about taking that foreign currency risk. So from an investor standpoint, you're earning 11% yields in a country that does have risk. I wouldn't say that Ivory Coast doesn't come without risk, but we think we'll benefit with what's going on in cocoa.
How fragile is the system now, or did we learn lessons from 1998 from 2004, lessons from Ecuador, multiple lessons from Argentina. Is your world more stable and orderly now?
It definitely is. So you have a much bigger depth of investors in the marketplace. So I think just that diversification of the holders, when you go back to 98, it was a very small, concentrated universe of people that were invested. So when a decision was made to maybe exit, you saw much more pronounced swings in prices. So I think that's a big benefit, much better transparency. And I would say also that I think the analysis that goes into it is broad and deep. You're seeing people really make prudent choices. So one of the big things that's really disappeared from our market is that concept of contagion. Back in 98, contagion swept everything. So whether it was in Mexico or Asia, today you have a Middle East problem going on, and we saw this as far back as the October attacks. Very muted reaction, and again, you're seeing that today with the most recent update on the Israeli-Iran conflict. Very muted reaction.
Hey, Jeff, fresh my memory, we haven't really seen any sovereign defaults, I guess, this year. Is that the case, and is that a surprise?
So we did see a couple defaults last year and in the year before. So it's not that we haven't had some defaults, but there are a number of countries that were on the edge, and we've seen them either really buckle down, do more prudent activities. El Salvador has done a great job of getting themselves back onto a better stage. They just issued $1 billion. Valuations look a little stretched, but even talk about Egypt. Egypt was struggling, and then they get a $35 billion investment from the UAE, which is a tremendous buffer for them. So I think that what we're seeing is, with the support of international communities, that defaults may be behind us, at least for the near term here.
One of the big shocks we heard from Eric Martin, our lead IMF reporter, just definitive on this, is Jeff Grills. Eric Martin was very, very plus on the IMF is now well funded to take care of many global crises. Do you agree?
So I think the IMF is available. They've gotten away a little bit from their mandate of being that lender of last resort when countries get into trouble, per se. So if you had some of the larger countries, say a Brazil or other things like we saw back in the early 2000s, that could cause some problems. And Argentina back in 2017 and 18 is a case in point where they did lend $45 billion to them and didn't end up working. Argentina did end up with a default. So I think the IMF has been very functional and positive for emerging markets. They've been there to help with some of the smaller countries. We'll see what happens, hopefully, that if we don't get into a negative cycle with larger countries, but they do play a very critical role.
This has been valuable. Jeff Grills, I learned a lot. I learned more from him than Sassauer.
Yeah.
That's amazing how that works. Jeff Grills with Aegon. They're an EM debt, and this is very important for those that aren't familiar with this. You say to yourself, Panama, well, they must issue the debt in the Panama currency. In the major sea change from 1998, Stan Fisher at the IMF, is the issuance of government debt in euros, in Swiss francs, in US dollars.
Yeah,
Of course, China wants to get in on that as well.
Exactly, as Jeff Grills was just mentioning. Ivory Coast issued a U.S. dollar bond for the first time in 7 years in early 2024. So maybe some greater stability in some of these emerging markets, which is dovetails in with what we're hearing from the IMF.
How are you doing on your cocoa trade? I mean,
I'm just looking at this
trend,
chart, Tom. I mean, it's just, I don't know what's going on here. From 4,000 to over 11,000.
There's a shortage.
Yeah.
There's like a shortage of stuff.
Exactly. Coming out of
then the
certain parts
demand,
of Africa.
Lisa Mateo's the demand. I mean, the chocolate demand.
Our demand is right downstairs on the ground floor of this building, Tom. That Swiss chocolate little store that stayed open completely through the pandemic while everything else shut down.
I've seen you
the
in
Swiss
there.
chocolate store stayed open, and people were going in there with masks on and all kinds of gloves. They had to get their chocolate.
You should have seen before Valentine's Day. The line was ridiculous.
Oh, is that right? Okay, that makes sense.
And what, pray tell, Lisa, do we enjoy at the Swiss chocolate store on Lexington Avenue?
Oh, they have these chocolate-covered cherries and then chocolate-covered. It has to be all dark chocolate, though.
Yes.
That's the thing. You have to have it all dark chocolate. That's the way to go.
Yeah.
Yes.
Okay, very good. Well, we have an improved tape off of all that we've seen. Thank you to Roz Matheson, Henry Winter, and Meyer, I should say, Henry Meyer, all of our people working on Israel and Iran. We've had good coverage there, and the coverage is. The tape improves. We need to get the markets open. Stay with us. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. So how will the markets react to geopolitical tension in the Middle East? So far this morning, we've seen futures recover most of their early losses. Oil switched to a decline, wiping out that jump that took Brent crude above $90 a barrel. And this change comes after Iranian media appeared to kind of downplay the impact of Israeli strikes. The markets are open. Let's get right to it and see the reaction. We'll start with the S&P 500 right now, down about 0.1%. We get to the Dow. That is little change right now. And over the NASDAQ, just ticking in, down 0.3%. Over to the bond market, the 2-year yield at 4.98%, down a basis point. The 10-year yield at 4.60%. That's down 3 basis points. Check in with commodities. We have Brent crude, $86 a barrel. NYMEX crude at $82 a barrel. At the open, we want to check in with Netflix. They're down nearly 7% right now. Reported first quarter earnings that were pretty good, but its second quarter revenue forecast, that was a bit of a disappointment. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. This conversation now is important in two senses as well. One is Smead management of Washington State has arguably the #1 value track record out there. We'll go into all that. But the other thing is I get asked like 3 times a week, why aren't you doing a book podcast? And I say, I don't need to do one. Cole Smead's doing it for me. Yep. And the answer is, he's doing what everybody wants, which is talking to people with really interesting books in a really interesting adult conversation. Cole Smead, how is your podcast, A Book with Legs, doing? Are you killing? You got Harold James on. You got Chris Roush on. I'm impressed. How's it going?
It's first off, it's wonderful to be here with you guys. I think this is my maiden voyage with you on this show.
My deepest
this morning,
sympathies.
Tom. So, to your point, I mean, Harold James' book is incredible. As investors, Tom, I would say we're learning to learn. And that's what books provide us the opportunity to do, is test theories long before we can test them in our minds, in our portfolios. And I think it's a pure blessing.
Right.
We're doing Rob Copeland's book, The Fund, later today on a recording. And it's our best chance to, dip into New York.
Right.
And London as well.
Look, A Book with Legs, also single best idea we're putting together right now, a podcast that we're experimenting with, is, well, I love your terse economic discussion. Sounds like your father. Tech looks stupid. How stupid does tech look, Cole Smead?
Yeah, I mean, the secret to life's weak competition, Tom, to quote Warren Buffett. And, as investors, our goal isn't necessarily to do things that are right. It's just to not, to your point, do stupid things. And I think that's where we find ourselves. We talk a lot about the idea of stock market failure. We just don't think that's ever been higher. And I think the real problem, Tom, is I'll use the word gestalt. We get to junctures these in markets, and you get to these gestalts where the reality is that the sum is not as big as we think it is. And you wake up with a situation years later where we all recognize that.
Sounds like something you use with the olive and the lemon and a martini. Could you put some gestalt on there as well? Paul, let's get everybody's attention. 5-year percentile, Smead Value Fund, 99th percentile. Pretty good. 3-year, Smead Value, 99 percentile. They are down. They failed the last 12 months. They're only 87 percentile. I mean, it's stunning.
Exactly. It's extraordinary. Cole, I'd love to hear where you guys see some opportunity in the value space today. What's kind of getting your attention?
Yeah, it's a great question. And Tom should tell people to go check out our international fund, too. But in the world, I think what's really bizarre to us is we're trying to find really good return streams. And depending on what kind of business you're going to buy, you have to recognize either the cyclicality to that or, the dangers of the history of the business. And what blows our mind is there are some of the best return streams out there that are being completely overpaid for. In comparison, places where you haven't historically found good return streams like energy provide, anywhere from, say, 15 to 30% return on equity. And if you go look at the book multiples people are paying, they're paying 2.5 times book or less. I mean, those are just really good places to buy returns. And it kind of plays at, like Buffett says, in Munger, we'd rather have a lumpy 15 than a smooth 12, okay? Everybody wants the smooth 12 right now, don't we all? And the reality is, I think we're going to find out that they're overpaying for the smooth 12. We're admittedly saying, hey, there's more cyclicality in places like banks and energy, but the return stream over 10 years is going to be rewarding at these multiples.
So how do you play energy? Do you go to the big diversified plays, or do you go downstream? How do you think, where do you see the opportunities in energy right here? Because we've got WTI crude oil at just under $83 a barrel.
Yeah, so we think we're going to wake up in a world, just look at the XLE right now. You're going to have consolidation continue. I mean, in the United States, we'll probably have 5 oil companies in a decade that have almost all the production. I would say the same thing for Canada, roughly speaking, it'd be 5 to 7. And so we're going to a world that's more concentrated. But if you look at the multiples and the return streams on the majors, it's not as attractive as other places. So whether you're talking in the United States side, we own companies like Ovintiv and Apache that we think have attractive returns, don't trade at multiples they should. If you look over the Canadian border, you go buy companies like Strathcona, which is a recently gone public business with the Waterous boys, who are billionaires in their own right, kind of in a Harold Hamm Canadian sense.
Yep.
And so there's just very attractive businesses out there. But again, a lot of this doesn't come down to how attractive are the returns, what are the balance sheets. That's not the question. There's a line in the sand. Are you willing to own energy or not? And it falls on ideological and other lines outside the economics, I would argue.
On the financial side, I know you mentioned financials here. I mean, we've got rates apparently higher for longer. Some of the big banks that have reported, calling out a little bit more caution on their net interest income outlook. What's your view on some of the banks?
Yeah, banks are funny animals. I love them, though. They're adorable. So whether we're talking U.S. financials or European banks, I mean, I think the banking world's been providing a lot of opportunity. Obviously, everyone looked and said, gosh, a European bank can't make any money. Why would anyone ever own those? Go look at the last 18 months in that space. I mean, we own Unicredit. It's our largest holding in our international. The thing's practically tripled. And we've just watched banks disappear in the United States. I would say, one, that shows you that the mania of low interest rates is centered in the United States, in our opinion. Right. But because that problem has begun to be dealt with a year ago, there was a lot of great pricing that showed up. Buying banks below book, where you can compound return on equity at double digits, that's been a pretty easy way to get wealthy over time as a stock picker.
Cole Smead, one more idea here before we run. I mean, everybody's Tesla. Everybody knows I don't look at it as a tech company. Frankly, I don't look at it as an auto company. I'm not sure what it is, but it's trading at a 54 multiple. You guys have loaded the boat, I believe, on Porsche. Ken Pruitt taught me how to say this. I used to say Porsche.
No.
Pruitt
it's a family name, Ferdinand Porsche.
Thank you. What are you, Ken
Yes,
Jr.?
I'm
the ghost of Ken
channeling.
Pruitt?
I'm channeling.
You're channeling Ken Pruitt. Cole Smead, you own Porsche with a PE of 8. Yeah. When does it move? What's the catalyst to get a PE of 8 to move?
Yeah, it's a wonderful question and been I'll call it just a somewhat frustrating question. So look at what the Agnelli family did with Fiat and Ferrari and all that kind of stuff. Here's what I've learned in my lifetime. Trust fund babies do get jealous of each other. And I think that's what's going to, in the long term, lead the Piche and Porsche family to actually unlock this. I'll give you a picture of this. Trayton Trucks spun off a few years ago. Only about 11% of the business floated. For a couple of years, it sat below its IPO price. If you go look at that stock today, it's above that. Well, we own 89% of that at Volkswagen, and we own that based on Porsche's automobile holding stock as well. So I think we're beginning to see where the IPO process and the spin-out process has begun to show success. I would just say pedal to the metal, show everybody what these assets are worth. And the question is, are they willing to take that risk? That's the risk we want. If they're not, Tom, such is life. We need to go do something else at some point.
Cole Smead, thank you. Of course, Smead Value Management, wonderful value track record, and his wonderful podcast, A Book with Legs. Smart discussion. Look for that out on Apple Podcasts, A Book with Legs. Green and red on the screen. I didn't say that 4 hours ago. It was pretty grim. We're doing much better. And Brent Crude is, Paul, why can't I find Brent Crude on the screen today? My eyes
It's there. It's up about 15 cents here today, $87.25 for Brent Crude.
Sweeney for the save with our news in New York City. John Tucker.
All right, Tom, Israel launching a retaliatory strike on Iran this morning. Comes less than a week after Tehran's rocket and drone barrage. The targets were military bases near Isfahan, a home to nuclear facilities and factories associated with Iranian drone and missile production. Secretary of State Antony Blinken at the G7 summit in Capri this morning had this to say after the strike.
We're committed to Israel's security. We're also committed to de-escalating, to trying to bring this tension to a close.
Iranian state media are downplaying the attack. And in other news, a jury has been seated in Manhattan in the criminal case against Donald Trump. Let's get more in this report from Bloomberg's Amy Morris.
It has been a painstaking process, but all 12 jurors and one alternate are seated. As court prepared to adjourn, Judge Juan Merchan worked out the schedule for Monday and Tuesday during the Jewish holiday of Passover, saying that they'll adjourn at 2 p.m. on those days so people can attend Seders. Now, as for today, they still have to seat 5 more alternates, so 100 jurors will return to be questioned to fill those slots. Judge Merchan says he's optimistic they can wrap up this phase by the end of today. Also, prosecutors asked for Trump to be held in contempt over a series of social media posts this week, something the judge says he'll take up in court on Tuesday. Amy Morris, Bloomberg Radio.
Yeah, the Biden administration this morning finalizing a plan to prevent oil development across more than half of the U.S. government's huge petroleum reserve in Alaska. Olympic organizers unveiling their plans today to use artificial intelligence in sports, joining the global rush to capitalize on it. The International Olympic Committee outlined its agenda for taking advantage of AI. They say it could be used to help identify promising athletes, personalize training methods, and make the games fairer by improving judging. And oh my gosh, the Taylor Swift album, her 11th, out today. The Tortured Poets Department, an amalgamation, this is what it says, an amalgamation of her previous work and reflecting the artist who, at the peak of her powers, has spent the last few years recording her life's work and touring its material filtered through synth pop, anthems, breakup ballads, provocative, and matured considerations. The hell is that? That was at midnight. After midnight at 2 a.m. Eastern, she then released the Tortured Poets Department, the anthology, featuring 15 additional songs. I guess it works. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Did you have something to say?
We're going to dive into the album this weekend and feature it next week. I mean, it's a huge deal. And Paul Sweeney, she's changed entertainment. I mean, this is not a one-off.
No, and I've you get some serious people like Paul McCartney and Bruce Springsteen saying this young lady's the real deal. She writes her music, extraordinary songwriter, extraordinary performer, and from my perspective, what's most interesting is a great business person. She has control over pretty much everything, and that is a very rare thing, as you well know, in the music business.
Well, she's learned that after losing control, and when you lose control, she had some real issues with a producer early on, and the best of luck. But in the pandemic, a lot of other people could sort of take it off with that kind of money.
Yep.
And she was a worker bee through the pandemic. So we'll feature that next. I'm going to get a hit over the head this weekend by the Various and Sunday Offspring. Thanks for the comments out on YouTube on live chat. Everybody else is in the same boat.
Yeah.
I mean, what happens at the Mateo household? Is it a Taylor weekend, Lisa?
No, we're not Taylor fans. We don't no Taylor in our house.
So your daughter,
I
thought your daughter would have been crying.
But you know what that did? That saved me some money.
Yes.
I didn't have to buy the albums, the T-shirts, the sweatshirts, the pins, the magnets.
Much less, I have to go to the concert, Mommy.
And the concert?
That's going to cost a gajillion
forget
dollars.
it.
I did a meet and greet with Ripon High School. A bunch of girls from Baltimore. Great set of girls in here, really interested in finance. They're looking at having Bloomberg terminals.
Nice.
In their school. And I said, how many have seen Taylor Swift more than 3 times? Half the girls put their hands up.
Yep.
Oh, there you go.
I mean, it's like a juggernaut. And all
the
that.
world tour, well over $1 billion in ticket sales. So it's just an amazing.
I've got a quote on Brent Crude here. I too can read the Bloomberg Professional Service. $87.11 unchanged on crude. Dow up 132. Green on SPX. Nasdaq still slightly negative. The VIX extended out through 19 is to a better place. 18.32. From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, stocks are mixed after solid economic readings. Hawkish Fed speak force investors to kind of rethink the timing of interest rates. The S&P 500 now tracking its biggest weekly decline since October. The S&P right now up 0.1%. The Dow up 0.4%. The Nasdaq down 0.1%. The 2-year yield at 4.98%. That's little change. The 10-year yield at 4.6%, and that is down 2 basis points. Over to commodities, we have Brent crude $87 a barrel, and we have spot gold higher at $2,384 an ounce. That is your Bloomberg Business Flash.
Here's the 1-1. Swung on. There it goes. Deep left. It is high. It is far. It is gone. Number 62 to set the new American League record. Aaron Judge hits his 62nd. All the Yankees out of the dugout to greet him.
John Sterling, he has retired, is the iconic voice of the New York Yankees. He joins us now. We are so honored on behalf of John, of Mike Bloomberg, and all of us here, thrilled to have you with us today. I grew up, John Sterling, on Kurt Gowdy. And I love watching Padres baseball, Don Orsillo and Mark Grant, because they have the energy John Sterling has. The energy that you have, that you gave to baseball, the enthusiasm you give game after game, where did that come from?
Gee, from inside my being, whatever the inside my being is. First of all, you should know this. I thought it was kind of nice about Bloomberg Radio. Bloomberg Radio is at 11:30 on the AM in New York. And when I grew up, that was WNEW AM. And that's where I wanted to work. I mean, I thought doing a disc jockey show at WNEW would be the end of the world. Anyway, I've had all this passion inside of me since I was a kid. I knew I was going to be on the air, which was a great thing because I never had to worry about school, which is a good thing because I was a terrible student. And I knew what I was going to do. And lo and behold, now I've been on the air 64 years. So, as they say, enough is enough.
Well, you know, it's been, no pun intended, a sterling career. But the issue, John Sterling, for so many is your enthusiasm is seeping out of the sport. Are the announcers today too numbers-oriented, too sterilized? I would suggest we need more John Sterling. Like, can you come back, please?
I cannot come back. I have done it. I've gotten all the... You know, Mel Stottlemyre, the pitching coach, used to go to the mound when the guy was in his final inning, and Mel would say, empty the tank. Well, my tank is emptied. And you know, all the wonderful things have been said about me. My goodness, it makes you feel so good. But as far as I'm being as truthful as I can, as far as the passion or the energy or the stamina, that's all inside of me. And I never thought I was setting records by broadcasting a game after game after game. It was just what I did for a living and how I supported my family, and also something I love doing. So, you know, what a lucky person I am.
Well, how about, John? I think speaking for Yankee fans, we were the lucky ones. 5,420 regular season and 211 playoff Yankee games. Just extraordinary. John, from your perspective, what's one of the biggest changes in the game over your career? I mean, there's been so many changes. What stands out to you?
Well, the last changes have been the best. You know, the pitch clock at Hall has made the game so much faster. And all they did was eliminate dead time. They didn't take anything away from the game. So that I like. I have hated the launch angle and all that goes with it. I want people to put the bat on the ball. And you know, that's kind of been a change. Pitchers not pitching to contact because they throw so darn hard. So,
John, just in the time that we've got left with you, I look at all the different players here, and we have a wonderful relationship with Jason Kelly, with A-Rod. Tell us your perspective on the uniqueness of Alex Rodriguez.
Well, he's a fabulous player who could run and hit and hit for extreme power. He should not have gotten himself into trouble. He didn't need to. He was too talented. But anyway, I always got along great with A-Rod.
John Sterling, congratulations. I guess wonderful ceremonies at Yankee Stadium this weekend. John Sterling, always, forever, Yankees baseball. With us now, Jason Kelly, who has to put up with Yankees baseball, and A-Rod is well. I mean, this is the heart and soul of it, the emotion of it.
Oh, I mean, Tom, I have to say, listening to John Sterling there, I mean, he is legendary beyond. And, you know, it's a reminder of how emotional baseball is to those of us who followed the game, and how much we associate these voices with some of the best memories of our lives, and how woven into the culture baseball is. I mean, you know this better than anybody.
Just to sneak this in as well, with your new effort with A-Rod, and it is the length of a career. And I mean, Larry Fitzgerald is someone who's been able to do it longer and better than it's over so quickly for so many.
It is, yeah, it's great. Larry Fitzgerald, the latest episode of The Deal, is, as you mentioned, and you know, he's someone who, just as we're talking about, embodies the sport.
16 years in the NFL.
Yeah, right, exactly. And one of the most interesting things about that, to your point, Tom, like most people don't get this long. One of the revelatory things that happens to him is at the age of 24, he meets the COO of JP Morgan, who basically says, you got to figure out your business. And then, Tom, he becomes an intern at JP Morgan Chase. Larry Fitzgerald does in the off season. Can you imagine sort of having the wherewithal to do that? And guess what? It has set him up to be a very, very successful businessman.
What's his distinction?
His distinction is really, first of all, it's the breadth of his investments. He's made 160 deals over time. Wow. He's a global investor, and I think he really has done a lot of work to understand everything about business, from governance to due diligence. He's on the board of Dick's Sporting Goods, so you don't see a lot of people go to be on the board of publicly traded companies after having a successful professional career.
And the podcast is The Deal with Alex Rodriguez and Jason Kelly this week, talking to Larry Fitzgerald, NFL star here. I mean, he's had such a long career, but that is really not the norm in the NFL. It's 3 or 4 years. What does he say about his longevity in the league? Because that's really unusual.
He did an unbelievable job sort of keeping himself physically fit. I have to think,
like
though, just like me, me and A-Rod. You know, I have to think that part of it was finding this balance that he had. Is very close to his parents. One funny story that he told about, you know, how important education and fitness and all of it was to him. He went back after a couple seasons to Chicago to see his grandfather, and he's, you know, an all-pro, Pro Bowler. He goes in to be introduced to his grandfather's friends, and his grandfather says, "This is my grandson, Larry. He's the only one of my grandchildren who didn't finish college." There you go.
Jason Kelly,
keeping it real.
Thank you so much. You got more of these episodes, right? I mean,
Absolutely.
You're still working at it.
4 more to come.
Very good. Jason Kelly, thank you so much. With Alex Rodriguez, who John Sterling says was pretty good.
Yeah, he was a pretty good player back
Pretty
in the
good
day.
player.
Yep.
What I loved about A-Rod is, even though you always knew the power was there, he's like the kid on the Cincinnati Reds now, De La Cruz. His ability to hit a single and somehow get to second base, it was not normal. You knew at the plate he could go to second base on a single. What a day. Thanks to our team, particularly early morning. Thank you, Rosalind Matheson, covering the G7 in Italy, for her help in getting us started on these events in Israel. Brent crude flat, 87.04. In red and green on the screen as well. The VIX 18.28. Thank you out on YouTube today. The live chat has been, I mean, they've been trashing me all day. I mean, it's just
it's tough out there.
I mean, they get the little heart thing. Lisa gets the heart thing. I got nothing. You know, the symbol they have for me, I can't talk about it on TV. In the vicinity of 1972-73, the world changed. A band in the South decided to play in the major key, which was revolutionary at the time. Their massive hit was Richard Betts and Ramblin' Man, the Allman Brothers.
that I was born.